This is what this video is going to be about. Uptrends, downtrends, consolidation, how to identify, right? So first, uptrends or downtrends, we're going to start with first, right? Downtrends. Now, we are going to look at this and we're going to tell ourselves, this is a downtrend. Say this to yourself right now. This is a downtrend. Now, answer the question, why do I see this as a downtrend? A downtrend consists of lower lows and lower highs. So in this case, this is a lower high and this is a lower low, right? Why is this our low? So we're going to backtrack and we're going to show you this. I'm going to show you like this. This is our low. Why is this our low? Because price got to a certain point, it got to a certain decrease, and it pivoted. So this is the lowest point we can be, low, right? This is the lowest point we can be. Also with the high, this is our highest point that we can be, right? This is the highest point that we can be. Now this is where you can identify trends. This is where you start to be able to identify trends, right? So with this low and with this high, we can now say, okay, price has reached a certain level and this is our low, this is our high. Now how we can determine what a trend is because we'll get this, but then what comes next will determine the trend. So if we have this low and we have this high, if price breaks the low, right? If price breaks the low, this now becomes our lower low. Lower low. This is lower than the previous low, common sense. Lower than our previous low, so this would make our lower low, right? Same thing with lower high. So if our high is made and it is lower than the previous high, then this will be our lower high, right? This is our lower high. Now, from this point on, this is where the downtrend continues, or this is where everything will play into part. We're gonna have our lower high, and then we're gonna have another lower low, lower high, lower low. Take your time to look at this and say, this is a trend, this is a downtrend. The same way will be an uptrend, right? So remember, there's lows and highs into the market, right? This is our highest point, so this is our high, right? Before all of this happened, so we're gonna put this here, we're gonna put this here, we're gonna drag this here. Before all this happened, we had a high, and then price ends up making a higher high. And once price has a higher high, it ends up making a higher low. So, and then with that higher high, we have to come back down, and then price is going to make that higher low. So I forgot to mark this part, so higher low. And this is our high, this is our low, and then this is a higher high than the previous one. So this one is higher than the previous, or this one is higher than the previous one. This low is higher than the previous low, right? So we have higher low because it's higher than the previous low. What you are seeing right now, I want you to put this and drill this into the back of your head. Price will not break these levels on purpose on the higher time frame. Price will not break an uptrend or downtrend unless it's intended to reverse or it is consolidating. Now, consolidation is basically when a high and a low is being, I guess you could say, broken back and forth. So you'll see a high and then you would expect a higher low, but instead you have a low being broken and it is just sideways. So it's not going in any direction. It is normally breaking higher highs, higher lows. It's breaking everything. It has no rules. And one thing about trading is everything has to follow a rule. You have to follow the rules. Charts normally have to follow rules. Fundamentals follow rules. Technical analysis follow rules. Everything follows the rules. You need a plan. You need all this. Everything has rules. Life has rules. You have rules. Trading has rules. So if consolidation is breaking the rules, you do not want to put yourself around something that is breaking the rules. Or why would you put yourself around a price or a market where it constantly breaks the rules? You want to find something that follows the rules, and it breaks rules sometimes, and that's when you stay away from the markets. And then when it doesn't break rules, you're always making money. So with this being said, always put yourself in a predicament where you are with a trend that is following the rules. You don't want to be in consolidation. I'm not going to explain more about consolidation, but this, you do not want to trade. Consolidation, don't trade it. I'm telling you now, don't trade it. How can you identify it? Identify it by when price is, you're looking for that uptrend, you start to see your high, you start to see your low, and then you see your higher high, but then you start seeing it break down to the downside, then get away from it, stay away from it. Because then that is price showing you it is consolidating or it's breaking rules. You don't want to be around trends that are breaking rules. You want trends to follow the structure that I have shown you. It's going to be complex. It's not going to look as pretty as what I'm showing you. Look at this and say, hey, I understand what an uptrend and downtrend is, and I know what consolidation is. So consolidation for you people, consolidation. A sneak peek, I like to use the one hour time frame. In this situation, I think we should use the, let's say, 4 hour time frame. Let's see if we can find something that makes super sense to you. We're going to use this, for example, right? Super sense. Price is going to have, let's say this is our high here, right? We have our high and then we have our low. As you can see, price has our high, has our low. As we can also see, price comes up a little bit, makes a new high, but this high is lower than the previous high. So now we have a lower high right here, right? We can say HL, and then we have our low right here, right? Our low. And then we have our high up here, right? So now we have our LH, price goes down and we create a low. Well, how do you know that's a low? Because price reaches a certain point before it starts to make a shift in another direction. So we have our lower high, once again, because this high is lower than the previous one. So we have our LH, and then we have our lower low. So lower than the previous low, which is right here, right? Or you can even use this one down here, whichever one fits for you, but this one is a support, and we're gonna talk about that later. But we have a lower low, a lower high, and then we have a new low, which means this low is lower than the previous one, so that is another lower low. And then we have another lower high, because this high, as you can see, it was going up high, but it didn't go higher than this one. And vice versa, we can literally track this all the way down, right? We can track this all the way down. But that's just basic fundamentals. So indication basically is when price breaks above a high or a low level and indicates that it is going in a certain direction or a trend is starting in that direction. So what we have here is price ranging. So we'll have price ranging for a bit. And then there will be an indication, and this indication can be either big or small, it doesn't really matter. I normally personally like to look for the 4 hour, 1 hour levels to do this. So like, let's say if we have our swings. So swings is basically when price goes up to a certain point and then it rejects and then heads the opposite direction. So these are swing highs and swing lows. So remember I said we don't trade consolidation. That is because we wait for those indications to play a part. So then we know which direction price is going to be headed. So the indications will be coming from price having that momentum, the higher time frame, and just overall trading when price is in session with that volume. Indications can only happen when it's breaking above or below swings, and that is highs and lows. So swings, highs, and lows. So indication only can happen from when price is breaking these swing levels, and swing levels that you should be looking for most of the time is going to be on the 1 hour and 4 hour time frame. You can even go for daily, but most of the time if you're day trading, you really want to hit that 4 hour and 1 hour level. I personally use the 1 hour level. It works for me a lot. There will be some times where I scale to the 4 hour time frame just because the 1 hour isn't as clear as the 4 hour time frame. Whenever I am looking for, just overall the trend, I'm on that 1 hour time frame, and what I'm doing on this 1 hour time frame is waiting for those swings to be broken into any direction. It could be up or down. Swings broken into that direction, and that will be my indication. What an indication is basically telling you is overall showing you, hey, the trend is trying to push in this direction of the market, and this is indicating you that price is having that momentum above or below that level, so that way you know exactly where the volume is coming from. Think about it this way: the uptrend and the downtrend that we talked about yesterday, this is how it starts. So you don't see the whole uptrend yet, but this is letting you know this is where it starts at. So you're not going to catch the first of it. So uptrend and downtrend. So we're just going to do this downtrend. This is where that indication mostly starts. This right here, this move right here starts that indication. Then this is the correction, and then this is the continuation. Without this indication, you won't be able to know when to get into the market because it would just never happen, right? So with this indication, it overall shows you like, okay, price is going to move above this level. So we're going to put this down right here. Price is going to move in a bullish manner above these swing highs, and it's going to push to a certain level. So think of an indication as basically the starting point of a trend. So you need that starting point so you can be able to utilize it, understand its pattern, understand its movement and why it's moving, so that way you can get into the charts or you can get into the trade later on down the line. Most people, they look at the charts and they'll be like, what is the trend? And they'll be like, where is price at? And the best way to answer these two questions is overall looking at those swings. What is the trend? So what is the trend? Currently looking at the swings. Are your swings getting higher or are your swings getting lower? So if your swings are getting higher, most likely price is becoming into an uptrend. If your swings are going lower, then most of the times your trade is going into a downtrend. So the best way to overall look at an indication is this making my swings go higher or is it making my swings go lower? So in this case, if we're looking at it, these are our swings. Because we have our swing highs right here. So swing high. Price, think of a high as the highest point it can go. And if we have those swing highs, if anything goes above those swing highs, then we have new swing highs. And if we have new swing highs, that means we have a uptrend starting. Price has bullish momentum. Also, with that indication, this also shows at a certain price point. So let's say this is 500. Let's say this gray area is 500, right? What this goes to show, this 500 level, so this level of 500, price breaks above that 500 level. So then this means anything above 500 will have the same momentum as it had before. So the same momentum that's driving it up to, let's say, 600, right? So let's say this goes up to 600. So that indication is now going to show this is where that momentum started. It started anywhere above 500. So anything above 500 has the potential to go to 600, right? That's basically what the indication is showing you. So it's showing you where your entry is going to be, and it's showing you where the exit is going to be, because when price gets to a certain level, what price is going to end up doing is having that correction. That indication will later on have a correction, which then you'll look for price to switch the trend, switch the market structure, and come back above this level. And that will be your entry point for the next go around. The most important part is finding that indication, and understanding indications can only happen from when it's breaking swing levels. Since our swing highs are broken, now we have a new high. And after a new high, or after any new market structure is shown to the market, normally price ends up grabbing liquidity, but I'm not going to confuse you just yet. But after price makes a new high, just prepare to see price have some type of correction, some type of movement to shake the people out, because the reason why we don't trade this is because of that liquidity that comes after. It could be very strong, it could be subtle, it could be, not the biggest, or it could be no liquidity grabbed at all. But most of the times after price makes a new high, it ends up grabbing liquidity in the market, taking people out, and then having that second go around. Let me show you what it looks like on the charts. We can go to a 30-minute time frame, and we can kind of just start from here from this week. So this 30-minute time frame as well, you can use the 1 hour, 4 hour, 30-minute, right? So in this case, we have that swing high level, right? So we're gonna focus on the swing high level, and I want you to see the indications that happen above this level that showed you that above this level, price was gonna have that bullish momentum, right? So first, we have our swing high. Swing high is holding up a level, so we have our swing high, swing low, just like we seen in the picture that I just showed just a couple seconds ago. Swing high, swing low, and then price has that indication. That indication pushes above the swing highs that we have, and since that did that, it had that correction, took people out of the markets just a tad bit, and then continued to go up and make a new high. So now we have a new swing high. So overall, we can see that price continues to break its swing highs and keeps getting higher. So this means price is in a uptrend, right? And as well, I want you to take note as well that price, when it's making these swing highs, it's making supports too as well. So this is our previous support, and then we can see price goes up, and we can count this as a support. It's a very subtle support. It's a very subtle support. But you can still count it as support. Overall, price was holding this level, which made this whole movement in general. But you, at the time, you would have never seen that price was going to just make this subtle support and then continue. But you knew that this was the push up. So once again, we have that support. Price retested that support. So overall, not breaking any structure to make us think otherwise than our uptrend. And then if you want to count this as a support too as well. So if we count this as a support, I'm going to show you what I mean. If we count this as support, right? Then we have that push off the support, and then we can see that price ends up making that new high and then breaking the structure that we had on that support if we mark this as support. So if we look at this as support, then we can see that, oh, price is breaking the trend, or price is trying to reverse, which I'm gonna explain later on down the line in the other videos. Is if we have this, so if we have price showing us like, hey, price is breaking the support, the reason why we wait that second time around is to avoid these fake outs, because this would not bother us because we don't have that second push down. It broke once, but eventually came right back above that same level that we had the indication in the first place and bought even more, right? This happened only because price has a new high. So that's what I'm trying to get you guys to understand, is like when it comes to trading based off those breakouts, you want to be very, very careful, because price can sometimes liquidate you and you won't even know it, because you're just trading based off the breakout instead of trading based off the market structure. So you can trade long term. You don't want to trade where you're in a trade for a bit and you're not able to capitalize off the whole trend. You want to be able to put yourself in a good position where you can capitalize off the whole trend, not just a little bit of it. And it is very possible to be able to catch a bigger piece of the trend than just a small day out of the trend. So you don't want to constantly try to keep looking for different days where you can get into the trend, where you can only trade one day and be able to hold for the next 3-4 and maximize your profits based off that. So once again, that low was made, and irrespective of the support, it didn't break any further than what it did, but this movement down was based off it having a new high. I guess you could say a new indication, and the new indication will cause price to drop dramatically or drop in a certain way because of all that liquidity that the market can grab. If it sees that a lot of people are getting into the markets on a breakout, then price is going to make a subtle movement to the opposite direction to wipe out as much money as possible. And also as well, this was news as well, but this just goes to show when it comes to the indication, you want to avoid trading the indication, but more so of looking at it as information. So the whole point of this video is to look at the indication as I guess you could say a blueprint up to what you're going to do, right? So look at it as where your entry is going to be, where your exit is going to be, and after the correction, that's when we'll go over the stop loss levels and where you need to set your stop levels. But the indication is overall to provide you the entry and the take profit that you're going to use. Today we're going to talk about corrections. Corrections are normally what grabs liquidity in the market, and basically it makes the reversal so that you can enter the trade. So pay close attention because the indication part is the easy one. Those are normally just signs to show you that price is going to move in a certain direction. The correction is after the indication, which shows basically where liquidity is grabbed, and then when you're waiting for the market to pump back up or pump back down, whatever the case might be. We're going to start off with that same thing that we had yesterday. So this is where we can basically see what trend is going to be started. So we're going to go ahead and start everything here, boom, 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 and then we have this, right? So we don't know what the trend is right now. You don't want to trade consolidation. Consolidation is when you don't get anything higher or anything lower. So no swing highs are being broken or no swing lows are being broken, and that will show you consolidation. So we're going to mark this and we're going to say consolidation. We also have swing high, and then we have swing low, right? Swing high, swing low, swing high, swing low. So all of these are swing highs. Right now we have our swing highs and swing lows. So in that consolidation, all we wait for in this level. So once again, also as well, we trade 1 hour and 4 hour time frames. So 4 hour long-term swings. And then this is more for my day trade swings. So what I mean by day trade swings is normally what I try to do is I find a day trade and turn it into a swing trade. My 1 hour setups are something that I'm like, okay, today price is going to go in this direction. And then normally when I take those trades, it is based off what the entire trend is going to be. So I try to look for that initial position so that way it can lead into a long-term swing. So with that being said, normally whenever I'm marking up my charts to be able to see what we're looking at now, I'm looking at the 1 hour or 4 hour time frame based off of how clear it shows to be. So if the 4 hour is clearer than the 1 hour, which in some cases it can be, then I would look at the 4 hour time frame. If the 1 hour is clear, then there's no need to go to that 4 hour time frame. If the 1 hour is already showing me a good amount of structure and I can see the highs and I can see the swing lows, because there'll be some cases where you're using the 1 hour time frame and everything's a little bit choppy, but you can see prices kind of going up or kind of going down. So you can see visually that price is going in one direction, but the 1 hour is a little bit more choppy. And what I mean by choppy is it's going up and down, up and down, up and down. But the 4 hour might just have, those clear highs and clear lows. So that is the time frame that I use. Time frames play a big part in that correction going into continuation. So with all this being said, remember yesterday we talked about indication, but I'm gonna touch back up on it again. An indication can only come from price breaking above a swing high or low. In most cases, most people will call this a support and resistance, but I try not to teach myself that word because support and resistance, normally when people think of that, they think of, oh, as soon as price gets to the support buy or as soon as price gets to the resistance sell. And that's not always the case. You actually want to use the opposite of what you probably learned already, is at resistances, you're looking for price to give you that indication, because this is normally telling you when price is breaking a resistance, is normally telling you that price is having the potential to have bullish movements above and to go higher. So think of this as a price point. So each level has a price point, especially if you're using the higher time frame. And what I mean by price point is these levels cost money to break. That's why they hold so strong. So since they hold so strong, especially on the higher time frames, it costs a lot of money to break these levels. So these levels do not just break because the market needs to grab money in order to break these levels. So whenever a price has collected enough money, so that's why you see consolidation sometimes, because it's accumulating the money together, and then once it feels like it has enough money to break out, it will have that big burst because it's gained so much money. It's like shaking up a Coke bottle. If you shake it up long enough, as soon as you open the bottle, as soon as it has the opportunity to break out, it's going to go everywhere. So the same way with these levels, like as soon as price collects enough money and it's shaking up the market, it's grabbed as much liquidity as possible, then it'll eventually go into the direction that it wants to go. So it could be up or down, and it gives us that breakout. It gives us that indication. And the thing is with this, right? So think of it in this way: when price normally breaks out, normally it'll be a burst for a small bit of time, and then you start to see it slowly die down and go away, right? So think of the indication and correction being the same thing. The opening the Coke bottle, everything explodes everywhere. Price, it starts to slow down, dies off, and then there's a mess everywhere. So it's the same thing with the indication and correction. So once price breaks out, there's this big explosion. Everybody's trying to get into a trade. Everybody's rushing to get into a trade. Everybody's trying to look for something. People are in buys. People are, if it's reverse, so if it's like a option, if it's like this, if it's going down, then everybody's trying to look for that sell, look for that buy, and nobody knows what's going on. They just know that price is exploding. So with that, it causes a lot of FOMO, a lot of greed. And I used to be this way where I used to see breakouts, and there was some that I profited on, but what I like to focus on is not what just makes me profitable, what makes it consistent. So what I can say is this normally causes FOMO. People get into the markets, they don't know how far price is going to go, so then they start getting into the markets, getting into random positions, and overall, losing money long term because this is not always going to work. It's not always going to explode 200 points or 300, 400, or it could just do 10 points, and then that can be an indication, right? So it's not always going to explode super far. We can make a lot of money and then close for that day. Some days are going to be a small move or a small break above, a small new high or a big new high, whatever the case might be. But to avoid this, just kind of use it, set your alerts. If price makes a new high, note that, because what today's topic is corrections. Corrections are very important in the market. Not all the time price is going to give you that correction fully of like how I'm going to explain, but I can teach you a way to understand how to know when the correction is over. So corrections are not always going to go all the way back to the previous level that it went to, but I'm going to teach you later on down the line the different types of corrections. In this video, I'm going to just tell you what a correction is. So the correction happens after price makes a high or low. New high, new high. So that's the biggest point. New high or new low. So this normally happens after a new high or a new low. And why does this happen? Because the market is taking in all the FOMO traders, the greedy traders, and what then is going to do is going to realize there's so much money on the line because there's so many people buying or selling this breakout. In this case, they're buying this breakout, and there's so much money on the line that it can use, right? And also as well, this means wherever price ends up stopping, this also lets us know that there is in this case, there's an amount of sellers here. So there's a bunch of sellers here, and there's more sellers than there are buyers at this point. So buyers, but what will normally happen is a lot of people will have this breakout, so there'll be a lot of money on this end of the stick, so like right around this area, and then there'll also be people that are really late to the move, which is up here, which these guys normally put in a lot of money because psychologically, people who end up buying at the top, they think that price is going to still continue to go. and they normally FOMO because prices moon so much, it's went up so much. So by the time that people enter here, they feel like they've missed out the whole move. So they go extremely hard on their position because they feel like they missed so much. So they're trying to grab as much as possible, thinking it's going to continue to go up. So psychologically, which is what I'm pretty big on when it comes to trading, there's going to be two areas where people are going to normally have positions. The initial breakout, which more of the advanced traders that's been trading breakouts, they're normally going to trade around this level, and then the beginner traders, which are going to have levels over here at the top, or probably mostly in the middle. So roughly around these two areas, there are a bunch of orders, a bunch of buyers in the markets that are just trading based off of emotions. So what I like to do is I also think of price coming to this level and saying, hey, there are more sellers right now. We've reached a level where there are more sellers in the market and we cannot push past this, even though we have a lot of buyers in the market right now, but sellers are not, there's so many sellers at this point, and we only have, let's say, and these are just example numbers, like the market has trillions of dollars in it, but these are just examples, right? So let's say at all the FOMO traders and everything, we only have 500 people in that market, right? But the buyers are only going to go up to 1,000. They reached 1,000. So now they're like, oh, bro, we don't have more buyers than we have sellers at this level. So what then this causes is the market to think, okay, there's 1,000 sellers here, but we have 500 buyers. What we need to create is now we need to take out all the buyers so we can collect all the money that they have, and then later on go back up and try to break out of that sell range, so the sell level. So then the correction happens, and normally the correction happens from the initial breakout, because then all stops should be out. So the people up here, they're liquidated about time price is halfway. They're mostly liquidated, but by time price is halfway. And then there's other times where price has to take out these guys, and they liquidate them as much as possible, go back into that range, which is very important for the continuation, because the continuation is actually where our entries, stop losses, and take profits are going to be set. That's going to be in the next video. But to explain consolidation or continuation, my apologies, to explain continuation. Bro, so many C's: consolidation, continuation, correction. To explain the correction is basically telling you the market is grabbing liquidity based off of people FOMOing into the market. So you're basically using a correction in a way that most people don't look at it, more of in a psychology way, is because there's people in the markets FOMOing, there's people just getting into the random breakouts and making poor decisions based off of what price is doing, and they're not thinking long term about the situation. Me, as a trader, I'm going to teach you guys how to think long term, but you can still trade day to day. But when you trade these day to days, you're going to think in a sense of like, I'm going to trade this day for a buy, but I know this buy can go long term, so I can hold a long term. You want to be able to take a position and be able to scale into that position, but once price gets to a certain point for that day, you can scale out but still hold that trade. So if you don't know what scale is, it's basically getting into the position and then start adding positions and then holding for that, that day, that week, and then being able to hold that trade and continue to maximize on the trend. This is basically what the correction is about, when price is pushing back down, grabbing as much liquidity as possible. And normally you would want to look at this correction. So notice how we've marked up our charts on the 1 hour or 4 hour time frame. This correction you're going to look at, correction, is monitored on the 15-minute time frame. So when the correction starts to happen, you want to start monitoring this on the 15-minute time frame. And the reason is because if you look at it on the 1 hour, it's just going to be a candle or two going back down. It's still visible, but the reason why we want to get into a habit of using that 15-minute time frame to wait for that the correction is because it's going to play a big toll into knowing when the correction is over, so that way you can get that entry on that 15-minute time frame when price is back above those swing highs. So basically, ICC, all we are doing is waiting for that indication to tell us where price is going to head to. What level do we need to set our TP at? Because this is going to be where our TP is, right? Because this is the level that sellers are going to be at to push price down. So if we're buying, we're always buying into the sellers, and if we're selling, we're always buying, or we're always selling into the buyers, because those are the people that we are basically going to swap our contracts for. We're going to swap our contracts for the people that are waiting to basically purchase them right off the bat because they're already sitting at that level. So with this being said, the easiest way to understand a correction is thinking of it as, if a new high or a new low is made, then think of liquidity, think of the market trying to take all those people that are in a breakout, take them out before making the next big leg up, which would start the trend. So watch video number 1 again. Remember, that trend is very important because higher highs, higher lows are constantly being made, and the only way price is going to break those levels is if the trend is reversing. But if the trend is not reversing, then you're going to constantly get those higher highs and higher lows. And if you look at this, we see that price is giving us that indication, it corrects, and then back above that market, we can capitalize on the rest of the trend. So that's what I'm talking about when I talk about swinging my trades and holding my trades longer, because if price is trending, it will not break its structure, so it will not break its support levels. And the longer that it holds these support levels, the longer we can hold our trades, right? And we can keep targeting new highs. So our first position will look like this. So if we have our indication, our correction, and then the continuation, our trade will look like this, stop loss below the previous level, and then we'll target the previous high. But what this calls us to do is, since we're targeting the previous high, if price is truly on an uptrend, then it would end up creating a new high, which we can then hold for, and then we can maximize our profits that way. So that's basically what a correction is. That is the best way that I can explain how to overall see the correction. Tomorrow we'll talk about how to know when it's over, so that way you can get into an entry. So tomorrow's going to be more continuation. Continuation is where you get your entry, stop loss, and TP. Today we're going to go over the continuation. It is the most important part to me because step 1 and step 2 are very important because they correlate into 3. You need step 1 and step 2 first before you can find 3. So the continuation is basically when price, after the correction is over, you're waiting for price to flip the trend and take it back up. So you're basically looking for a reversal using the higher time frame levels, but also using that 15-minute time frame to break down, or even 5-minute time frame to break down when price is actually reversing. So best case scenario to explain it, you're basically using ICC inside of the trend that we're looking for. Basically today is going to be going over continuation. Continuation is my entry model of how I get into trades. I'm going to show you 2 trade setups that I just took recently, how I got into it, why I got into it. But first, you have to remember step 1 and step 2. So the indication and correction are very, very important, right? So let's get into it. First of all, we're going to go based off the 1 hour time frame, and we're going to look at our levels. So notice how price is going up on this uptrend right here. So we have this uptrend, and we can see that price is remaining structure, keeping its highs and lows intact. So we have our support level here, support level here, support level here until it gets broken. This is where we start to understand that price is changing trends. Remember, if price is on an uptrend, it should not break its structure unless it's reversing. And what the correction helps you is from getting faked out on if price, because this could have been a liquidity grab, but what the correction helps you, or what the continuation helps you do, is realize that you need that second move down to confirm that price is on a downtrend. And that's what we're going to explain today. So as we see this uptrend, we see that price ends up breaking that level and causing an indication. We have a new low, so we're going to mark this as a new low, new low. Remember, indications will always create a new high or new low, right? So indications will always create a new high or new low. So you shouldn't be confused on if price is, on an indication or not. You shouldn't be confused if it's making an indication or not. Is it a new high or is it a new low? If it's not either one, it's not an indication. And remember as well, when it comes to finding these setups, you don't have to go 30 years back, because a lot of people, they look at the charts and it's like all of this. You don't need all of this information. Just look at the previous price action that's going on. Can you find the high or low? Most cases, you'll be able to find the high or low. So here we have our high, here we have our support. So here we have our low, right? Here we have our low, here's our high, right? And we can use this. We can even put this into the equation if you want to, right? So put this into the equation. And remember, since we have that continuation on our hands now in our strategy, since we have that continuation, we're not going to take these buys because it only made the indication for us. It didn't come back above that level a second time. And you're going to see a lot that, waiting for that continuation above that level is going to save you a lot. So once again, remember, mark up your charts on the 1 hour or higher. So higher time frames only when it comes to marking up these levels because they hold really, really strong. So let's break down some entries, right? So as we see here, we have this indication. It creates a new low. Some of you guys are probably asking if we go inside. So let's go inside. Some of you guys are probably asking, like, what do you think about this? Like, these are new lows too. How come you're just only choosing this one? Okay. For example, we can use these lows. It still applies, right? We have the indication, price corrects, and then under this level, it continues to sell, right? It continues to sell, makes a new low off of it, right? So also as well, something I want to explain, when price makes an indication and does the correction, the continuation, normally if price is trending in one direction, is normally, the continuation is normally going to create a new indication. That's what you want. You want price to continue to repeat. So indication, correction, continuation, repeat. That's what you want the trend to do. So we can use that for people that kind of want me to show them that. So now we have an indication again, price corrects, and then we have another continuation, and then price makes a new indication, corrects, and then we have another continuation. Now, since we're trading on that lower time frame, so since this is basically a lower time frame trend, because on that 1 hour, we don't see that. That 1 hour, we just got that new low. After price made these two lower highs, we got that new low, right? But after that, notice how price starts to break structure, right? And that's mostly because the higher time frame is always going to take back control and it's going to be way stronger. But this new low is made, which caused this to grab as much liquidity as possible. So normally when price makes a new low or a new high, it tries to grab out those traders. So go back to video 1 and video 2 to understand where I'm coming from. Actually, video 3 should be the one. Yeah, video 3. Video 3 should be the one talking about this, but this new low caused price to want to go grab liquidity from all the people that have their stop losses above this level. Remember, this is our first time hitting these levels, right? Don't go all the way back and be like, no, it's not our first time hitting those levels. Currently, for current price, so since Wednesday, this is our first time hitting these levels. We're not looking back in the past. We're looking at what's happening this week, what's happening currently, what's happened in the past 5 days. So kind of use that for your basis. What happened in the past 5 days? You can even go, I would say 3 to 4 days. 3 to 4 days is all you need to look back, right? What happened in between there, right? So first time hitting these levels. So price is like, okay, there's a lot of stop losses that I can grab. They kind of got in on a breakout. They don't know exactly where price is going, but it's trending down under this level, but they don't know where it's trending to, right? So then price is like, let me grab those stop losses. Once it grabs those stop losses, it wipes all these sellers out the market. So this is their first time being at these new lows. But us, we're going to wait for the second time around, and I'm going to show you exactly how to break it down so you can get an entry. When it comes to trading, the indication, correction, continuation, the indication, you want to mark that up using the 1 hour. So once again, go back to the videos. But fast forward, if you want to find an entry, use the 15-minute time frame or the 4 or 5 minute TF, right? Time frame. So that's what TF means, time frame. So use those time frames for entries, and I'm going to show you why. So as we see here, price goes up on the correction. So we have our indication. So this whole move right here is the indication based off that 1 hour time frame. Indication, a new low. Indications will always create a new high or a new low. So now we have a new low. Price goes up on the correction. A correction is for grabbing liquidity. A lot of people ask, how do you know when the correction is over? Well, this is half, right? So what we're going to do is, since we can't see much here, but we can see price kind of stalling. The reason why I'm choosing this is because we can see here, price makes a little resistance and price is starting to not go anywhere. So normally I would mark the wick in this situation because we're using a smaller time frame. The 1 hour time frame wouldn't show that wick right here. It would just be the candle itself. So what I'm going to do is mark that as my resistance, the wick right here. I now have a resistance. I now have sellers at this level pushing price down. What I'm going to do is, since I can't really see too much, I'm going to try to scale in one more time, see what I see. So now I see a little bit more than what I've seen before, right? So notice how price here is building up this uptrend, right? This is normally what a correction is going to do, right? So now we have a higher high and we have a higher low, right? So now what I'm going to do is note these, right? So for beginners, please note these. Track your highs and track your lows. So note these. Boom. Right? So now we see that price is building higher highs, higher low, higher high, higher low, higher high, higher low. So back in video number 1, what did I say? If price breaks the structure, then you should either not be trading it and you should be watching it. So don't trade when it's not following the uptrend structure. So this uptrend structure, I wouldn't say trade it, but it is moving in one direction. It's on an uptrend. So we know it's on an uptrend. But then watch how price, so as you're tracking it, watch how price here starts to develop a whole new demeanor, a whole new setup, right? So we're going to split that one across, and we have our high and now we have our low. So you can do the same one to all of these two as well. Track your high, track your low. As long as price is continuing to break highs. So if you can see here, one sec, if you can see here, price is continuing to break highs. So that's how we know it's on an uptrend. It's breaking highs, but it's not breaking supports. So then here, if we want price to go higher, it should continue to break highs, right? But here, when it was going back up to break its high, it failed to do so. So now we have equal highs right here. And equal highs is normally telling you like price is not trying to go any higher than this, or what did I put? EQ. Right, put EH, equal high, right? So this is basically telling you price isn't trying to go higher, but it's also telling us it's not trying to go lower, because what did it give us right after? A higher low, right? So now we have a higher low and then an equal high, but price isn't going any higher. So now we know, okay, I'm not supposed to trade this yet because price hasn't fully, it's not wanting to go up. And if it's not going to go up, if it's not wanting to go up and it's not wanting to go down, then I shouldn't be trading it because it's not trending. So even though we have that equal high, it's not going higher, we stay away from it. So then we continue to mark our charts out, right? So now we have this higher low. This is our new support since prices, yeah, I got this right. I have to make sure it was higher low. Yeah, higher low, yeah. This low is higher than the previous one, so this is our now new support, right? So now since it's our new support, we can be like, okay, price shouldn't be breaking up below here. So now it should push and use that momentum to make a new high. But what did it do? It made another equal high. So now we're like, price is really not trying to go up. So if it would have maintained in this level and then pushed up, that still would have been good. But what did it do this time? Price ended up breaking that level of support and making a low. So now this is our indication, right? The indication. Sorry if I spelled that wrong. So now we have an indication right here. I'm not going to keep this for too long because it's pretty big, but now we have an indication because now price is telling us, hey, under this level, I have a potential to sell under this level. I'm bearish under this level. I'm trying to be sold under this level. There's not enough buyers to keep me holding up. That's the best way to explain it, right? Price is holding up. So even here, right? Here, buyers are here holding. Buyers are here holding price up. So it's not letting it break levels of support. Price can come back and retest this level if it wants to, but buyers should not let this break through, right? Same way with higher time frames, it's just way stronger, right? So here, price says buyers are holding price up as much as they can, but if they lose strength, sellers are going to take control. So sellers are saying like, yo, we got some power to break out of here. Just it's teasing you, telling you like, yo, we have potential to break under here. So they're letting you know in advance, under here, we got control under here, right? Because buyers are getting weak, so we got control under here. That's what the indication is. So then after this indication, we have a correction in the market, which normally grabs liquidity. But what this helps us with is back on. So once again, go watch video number 1. The fundamentals are very important. Since we have equal highs now, right? Now this gives us a lower high. And remember, back on video number 1, if price is giving a lower low, so this low is lower than the previous one, right? This one was high than the previous one, but now this low right here, this low right here is lower than this one. So now we have a lower low and a lower high. So this is now telling us, okay, perfect. Price is starting to build that trend, right? So what we can do in this situation, I'm not going to nitpick to the perfect position, but under this level, we can sell under this level with our stop loss above this previous level. Now, what some people would do is, since we're selling under this level, we're supposed to target this due to ICC, right? So under this level, we're supposed to have like this. But what people fail to remember is don't go off that 5-minute structure. Go off the higher time frame. We're looking for price to reverse on the 5-minute time frame because the 1 hour has a new low, and we're waiting for the 1 hour to stop correcting. But in order to do that, we have to dig deeper inside of the trend. So we have to dig deeper inside of the 1 hour to see what's going on. It's the same way with like being a doctor, being a surgeon. You need to go deeper into somebody's body in order to see what's really going on. So if somebody says they have a headache, what does the doctor normally do? They're like, okay, we have to probably do an X-ray or something. They have to go inside to get more information about your headache, because outside it will show, okay, he's saying he has a headache. But now we have to go inside to see what's really causing the headache, right? So it's the same thing with trading as well. So price will show you, hey, I'm going on this downtrend, but then you have to go deeper inside to understand, is it going to continue or is it not? So you really got to, put that hand to hand. So anyways, with this, you need to use that 1 hour level. So that new low, which is down here off the 1 hour, so you would scale back out. Once you start seeing the confirmations that price is getting ready to sell again on that 5-minute or 15-minute time frame, you can do the same thing on the 15. The only reason we didn't do it on the 15 is because the 5-minute looked 10 times better, right? So then what you would do is see, hey, I got my entry level. Where's my TP? My TP is going to be that 1 hour level that we caused that new low, because that's what the indication is going to be at, or that's what the indication ended at, and that correction. And now we have the continuation. Now, what I always tell people is, this is pretty brand new for some people, right? But what I always tell people is, for the better entry, for a more safer entry for you, what you need to do is enter under that 1 hour level, because this level is stronger and has more momentum, because that's what caused this trend. This is what caused this new low in the first place. So notice how when price got to this level, that 1 hour level, it was a way stronger push here, right? Way stronger push when it was under here. When it was above here, it was like, yeah, it was kind of playing around. But as soon as it got under this level, it started having reactions. It started having those bearish reactions way stronger, right? So what you can do is the same thing. Price is under that 1 hour level. You already have your lower high here too as well, under that 1 hour level. And all you're looking for is price to push under this level. You don't have to really wait for that candle close. As long as you have everything back behind you, there's no reason why you should be getting faked out or anything. You waited for your second time around. Price is showing you it's getting bearish. You have all the confirmations to show you that price is going lower. So we have more lower highs. So once again, the lower high here. Let me copy it. There we go. Lower high here, more lows being made, and then another lower high here. So over. Okay, it won't let me just grab this. All right, though. And then we have overall price showing us it's getting lower, even under that level of support too as well, right? So that is the one level. So remember as well, when you're trading this way too as well, you're normally going to trade trends off that higher time frame. So overall, bearishness is what is causing the trend. Because remember, if you want to draw a little trend line too, if you want, this uptrend is now over. We had the characteristics to show us now it's over. So now we're trading based off the trend. And this is where you as a trader start to make decisions if you want to hold longer, if price is showing that it's going to continue, right? So now we have a new low. So what this causes is a new low. And no, you're not going to get off at the perfect time, but just look at those characteristics. So as this happens, as this drop happens, so watch this, right? You would once again scale back in to see more information. The 15-minute was showing a little bit, but the 5-minute kind of shows better, right? So now look at this, right? Our normal TP would have been this level, this new low, right? But since price surpassed it, we actually got way more out of it, and price is still going down. Price is still building structure down, and it's still going down. But watch this, right? So boom, we have price here make a support level. So here we have a support level, and then here we have a high level, right? So we're already past our TP, right? So everything from here is how we treat it, right? How we treat it. So we have our high, we have our low. Price is still kind of equal high here. We have an equal high here, and then price ends up building a lower high. So now we have a lower high. So now we have our second lower high. So that means anything that breaks above here will start an uptrend, because price should not break a lower high if it's trying to go down. So if price is trying to go down, it shouldn't break these levels. So once again, go back and watch video number 1. Price should not break its structure unless it is reversing. What we start to see here is price makes that lower high, and then it also makes a higher support. This is what we don't want to see. So now we don't want to see price make higher supports. So then we can either exit the trade here. We can exit the trade here and be like, okay, that was our trade. You can go based off that, and we'll wait for our next setup. So notice how price starts to build this uptrend. Like I said, if price breaks above here, it's going to start that uptrend, and we start to see here. But then notice this, right? We have price building up, hasn't broken the structure, retest the supports, and then we have this right here, right? So we have the support here, it makes a new high, corrects, and then price starts to maintain this level right here, so it doesn't go any higher. So then you would have drawn your support or your high and your low. Excuse me. You would have drawn your high and your low. You would have been like, okay, Sai, it broke to the downside and gave me an indication. What did I say, right? You're not supposed to, because some people would have just sold based off, oh, Sai, you sell if it's under a level of support, you're supposed to sell, or whatever the case may be. But remember, your first 2 steps will save you from getting into fake out trades, right? It will save you from getting into fake out trades. This is price grabbing liquidity. So now it costs sellers to get into the market just to wipe them out, right? And then remember again, right? Boom, here. We have an indication above this level, and I'm not saying take this trade, but I'm just saying how, that second time around will most likely save you and get you into a better trade, and instead of trading that breakout, right? I told you throughout this whole course, I'm gonna show you examples of where every step is going to save you from something. So now we have an indication above this swing high, above this level, it makes a new high. So our indication, price corrects. What is a correction? Corrections happen to grab all the breakout traders and grab liquidity from those people, and then continue later on. So now we have price grabbing liquidity, tries to break that structure to confuse people, to grab all liquidity as possible, and then continues back above this level, which you could have traded off of, back above this level, and targeting that high. So targeting where the indication came from, right? You could have did that. Not saying I did that, but I'm just saying you see how ICC plays a part. So now, overall, we're looking for those sells, and we're waiting for price to change trends, right? Here we don't see price trend down, and we continue to follow this uptrend. And then price gets to a certain point, where it makes a high. So now we have a high here, and then where's our support? So our support is what caused this high, right? So what caused this high, and then our high. And then you start to see price break under once. This doesn't mean we sell yet. Just because we're looking for sales and price broke down once doesn't mean we sell. What confirms it is once we have our high, we have now a new low. So our indication, you see price correct, make a lower high. So this shows us price doesn't want to go higher than the previous one. So now we have our indication, our correction, and price continues to go back under this level. And what we can do is, once again, target here or put our entry here under this level. So we're selling when price gets under this level, and then we can put our stop loss either here, or you can put your stop loss back above the level that was created. Most of the times you want to use this one because you overall need some room for your trade anyways, especially trading NASDAQ. And then what are you going to do? You're going to scale back out to that 1 hour time frame, and you're going to target where the whole indication started in the first place, which is this new low. And then overall, once again, I'm gonna put my trades back up here and show you that I've taken these trades, and overall you can see how I enter. So overall you'll be looking for this as well. And that is the continuation. That's the entry model that I use. It works efficiently, as you can see. And yeah. So today we're going to get into talking about market structure and overall reaction levels. So market structure is going to play along into reaction levels, but I want to show you everything just firsthand of how my mindset is. I'm not really going to look too far back. I'm just going to show you how you can look at the market from this way and, you know, find those setups. First thing I want you to remember is the fundamentals. So if we have a high and we have a low, so if we have a high and then we have a low, right? These levels have buyers and sellers. So in this case, up here in this level, there are going to be sellers, right? Sellers, because this is the highest point that price can get to. That's why it's called a high, the highest point it can get to. And remember, fundamentals, you have a high and then you have the higher high, and then you have a higher high above that, right? And then you also have a lower high, which is meaning that bears are coming into the market, right? So we have buyers and then we have sellers too as well. So right here, and then we're going to put buyers, right? And what this essentially means is that when price gets to its lowest point, that's letting you know that buyers are stepping into the market to drive price back up. It wants to drive price back up because this is the level that they feel like purchasing their stocks and then taking it back up to the highest point, right? And if people are, if it's getting lower and lower, that is the amount of sellers that are coming into the market selling their shares at certain levels or selling their stock at certain levels. Buyers at a certain level, they're going to drive price back up, and then sellers, they're going to drive price down because they're selling their shares. With this being said, how I like to use the high and low levels, most people think I'm trading break or retest or just support and resistance. I don't think in that mindset. You might view it as that because we look at the charts differently. You might view it as support and resistance, break and retest, but there's things that I've seen where break and retest, how I've seen it and how people project it, is not the same way with how I trade, because break and retest is coming back out to that same support. So let's say price breaks and then it retests this level and then it goes back down. That's break and retest. What I've seen is price liquidates everything, comes back, and then later on down the line it'll come back below that level. That's not a break and retest for me. I don't see that as break and retest from what I've learned, right? So anyways, we have buyers and sellers. What I like to do is I like to think of it in a sense of, at this level, buyers have the most control, and it's like a brick wall in a sense. Price has a brick wall and it's not letting it go any lower than this. So if this is the case, anything above a swing low equals potential bullishness. Vice versa, anything below a swing high equals potential bearish. I like to think in this way because then ICC plays a huge part in how I should be thinking now. If I know price at this level has potential to be more bearish, and I know above this level price has the potential to be more bullish, I'm gonna repeat it one more time. Anything above a swing low, higher time frame, 1 hour, 4 hour, daily. Anything swing lows, swing highs. You should be looking for your swings on your 1 hour, 4 hour, or daily time frame. Really, you can do 1 hour and 4 hour. Those are the keys right there. Those are keys right there. Use that 1 hour, use that 4 hour. Watch how it changes, right? Watch how it changes your trading. But take what I just said. Anything above a swing low and anything below a swing high, they either have the potential to be bullish or bearish. The exact way I have it right here. And then this plays a part because when we look at actual price, everything will start to align with you, and it should make sense. So if we have this swing high, price comes up, resistance, sellers kick into the market, right? Sellers kick into the market, they're trying to drive price down. But then price is like, no, I don't want to go down. I want to keep going up. So it makes higher support levels, right? And then we have this push up, right? Remember, at this high level, there were sellers holding price from going any higher than this. There's sellers that was sitting at this level. Same right here. That same push down. Sellers were sitting here at this level. Sellers, I got to type it out for some of you guys. Sellers are sitting here trying their best to drive price down. Remember, if price is on an uptrend, it's going to start creating higher lows in this situation because the supports are getting higher, which means price is getting bullish, right? So now this is our next support. So this is telling me buyers are trying to drive price up at this level, right? But that's the least of your worries. You need to focus on the sellers that were here at this point. And now look at this. Price is broken out and pushed up and made new highs. So this lets me know that sellers at this level are no longer in control of the markets at this point. They've gotten swept out by the new buyers in the market, and the new buyers are coming into a new point of sellers. So now they've reached another boss, another level of sellers. So the market will then liquidate liquidity. Liquidity just means grabbing money. Keep it simple. Don't fucking use all that extra BS to understand liquidity. Liquidity is just grabbing more money. So the market sees there's more sellers. They're at a higher level of price. What is price going to do? It's going to liquidate the market because there's so many new traders. You can't even see what I'm pointing at. There's so many new traders at these levels. There's so much money at these levels that people might not have stop losses, might have a short stop loss. There's so many stop losses that it can take out to liquidate the markets, because when you make money from the markets, you're actually stealing from it. The market doesn't want you to steal from it. It wants you to lose so they can collect that money, because they're going to collect the money that you lose. So it's trying to push down and liquidate these people, make them lose, make them think, oh, price is going to sell off now, so let me sell. So now they're selling too. So once price reaches a level, it starts selling off. And then people then think, oh, price is selling, so let me get in sales. And then they get into sales. And by the time they get into sales, remember that higher low level, right? Price is not trying, if price is truly in an uptrend, and we've already seen the signs, right? We've already seen this breakout. This shows us the signs that price is getting bullish, right? Price is not going to break this level though. This first move up is FOMO and greed. The second move down is revenge trading and FOMO. And then price reaches a level where it cannot break because it's holding up strong using those higher time frame levels. And if it does break, that just shows us that the trend is changing in another direction, or most likely trying to grab liquidity out of the market even more to kind of stop you out, or, you know, to stop the other people out. And then we have that second move up. Remember, since we're talking about reaction levels, I want you to remember above this level, remember who was here, right? So under this level, we don't want to trade under this level, right? So we don't want to trade under this high. The reason why we don't want to trade under this high, because it does have the potential. Once it's back under here, it does have that selling potential to sell off. It does have that potential. So we don't trade that. We don't try to touch that. We wait for that market to get back above a level where we know price is going to have that momentum back to another level that it came from before. So we know price is going to have that same momentum. We see that price is going to have that same momentum. So whenever we trade, we're going to trade based off the momentum and the reactions that we have. Price is going to move with that volume, and you're going to look for price to, and this is just an example, you're going to put it under that higher low. But remember, back in the last video about entries, I showed you exactly how to get an entry. So with this being said, I want you to look at this way. And remember, reaction levels come from those highs and those lows. The highs and lows falls back into this. Here's your high, right? And then here's your low, right? So if price is above a high, that lets you know that sellers are not in that market. They're not above that level, right? Sellers are not at that level. So I'm gonna go ahead and put entry so you can kind of understand. Your entry should always come from where price initiates the bullish momentum. So that means the bullish momentum starts as soon as price is above this level. So when we take our entry, it should only be where that bullish momentum kicked in the first place, right? And then your stop loss should be at a level where it has that. So you see here where we have that higher low. Price is going to make another higher low. Based off the trend, it's going to make another higher low. Once again, go back to the fundamentals, look at the uptrend fundamentals, and then you can see that price will build that higher low. But yeah, you would scale down to that 15-minute time frame to find that entry, and you will take price back up, right? So 1 hour time frame. First thing that I noticed is that price has this high area, and then it starts sharply going down. So now I'm pretty interested because in my head, I know this big move down has caused something to break. It's broken something, and I'm not saying that just because I can see it already. I'm saying it because this is the first thing that points out to me. This is the highest point. Also, this low over here, but I can see that current price is all the way up here, so I'm not too focused on it, right? So the first thing that I'm going to note is that price has this high, and then I'm going to ask myself, what caused this high? How did price push up and cause this high? So then obviously I know now that I have this low level right here. So now when I'm thinking about this goes back into my entry that I had last week, this high and this low. So now we have this high, and we also have this low, right? So now we have the low and the high, and obviously we have this one that was a high too. So this was that indication for price to be bullish, right? So once again, this is that indication for price to be bullish. But the reason why we didn't get into that trade is because why? We didn't have our second push back above that level, right? Even here, right? Price tried to push up here. Why didn't it push up there? Why didn't it push up there? Or why didn't it push above? Because remember, sellers are in control below this level at all highs. You can draw this at any high that you have. Sellers are at that high, and then it's trying to push price down. And remember, buyers are at this low. So now we have buyers sitting at this low. Buyers are sitting at this low. So they're trying to push price up. So buyers are sitting here pushing price up. You can see price have that momentum to get driven up. But the moment price breaks this, remember, there are no buyers at this point because price is obviously breaking through it and causing a new low. So now it's causing a new move, a new momentum, a new reaction back down to these levels, right? So now we know anytime price is under this level, it has the potential to drive down to this level. And if we drag this over here, look at the, oh my God. So all we did was mark up the high, understand where that high has came from. So here, understand where that high has came from. And then we looked over here and we've seen price break that structure. So this lets us know under this level, price has the potential to sell back down to this level. This is our indication. Here's our correction and the continuation back under this level to take out this low, cause a new indication. This indication has a correction. It has a continuation that stops right at these levels, even though price was here, stopped here, but it's still good because there's buyers at this level. They must have came in a little bit stronger, They take out. Now this is the part where you need to start thinking more about reactions itself. So look at the same level that we're going to drag all the way through, this high, right? This high, remember, sellers are sitting at this level trying to push price down. So every time price comes into this level, that means buyers have to be stronger than the sellers in order to come back above this level, right? So if price here has sellers, once again, if price is here and has sellers at this level, it cannot be considered a bullish trend until price breaks out of a level where there are sellers holding price up, right? If sellers are pushing, I don't know why I said up, holding price down. So sellers are sitting here pushing price down. Even this break here, everything was this right here was all because the previous news that has came up and all the fake news and all that. That's just the markets. You're not going to get it right 100% of the time. But if you think about it in a market structure perspective, look at this, right? Look at this. We had a new low, price pushed up, price pushed up, made a lower high, pushed down, and then broke it. So now we can think in a mindset of like, okay, now there is on the 4 hour time frame a higher high. I guess you could say, yeah, a higher high. Price could potentially be making a higher low to progress later on, or you can just sit on your hands, wait for price to do its thing, and then later on show you, okay, this is the direction I'm going. But that's what the 4 hour looks like. When we jump on the 1 hour, we can see that price is getting lower. The lower highs are getting lower. And we can see that price is progressing down under those levels that we've already established as price being where the sellers are going to be in full control of the markets under. So notice how under this level, price has full potential to sell. Price under this level has full potential to sell. Price comes into this level, full potential to sell. And then here, we're back under this level, so it has full potential to sell. Same way with this level. There's buyers that were sitting here. They pushed the markets back up. And then the moment price broke through, it made a new low. The moment price broke through, it made a low. The moment price breaks through this level, where do you think it's going to go? If price breaks this level, where do you think this low is going to go? And with that being said, I'm just going to keep it as that. I really hope you guys understand it. Today we are going to go over time frames. You have to remember everything has to correlate with each other. If you're using a 1 hour time frame, everything under the 1 hour has to correlate with that 1 hour time frame. When it comes to trading on different time frames and being able to cycle through time frames and know what to look for, what I like to do is mostly I mark up my charts on the 1 hour or higher. Most of the times I'm marking it up on the 1 hour, and then recently, especially with the Nasdaq and US 30, I've been looking more of like 4 hours, sometimes daily. But that 1 hour time frame is definitely going to give you a lot of clarity when it comes to finding those day trades and then getting into the trade itself that same day to be able to hold for those swings that I look for. So with this being said, the 1 hour time frame, let's say we have price selling. We want price to sell under this level. What we want to do, the only time you really need to actually look for those correlations in different time frames is on the correction and the continuation. The correction and continuation should be the only time you should scale down. So let's say if we're looking at our charts, we just woke up, we're getting ready to get on the charts. The first thing we're going to do is go to the 1 hour time frame to mark out our levels. Our levels are very, very, very important. If we mark out our levels first, this gives a good idea of where all the buying and selling pressure is. So once you find out what the buying and selling pressure is, or where it's at, then this helps you bring clarity, and it helps you understand what you need to look for at these certain levels. So with that being said, if we're looking at the 1 hour level and we already have clarity that buyers are sitting at this level until price breaks here, so once price breaks here, this lets us know that there's no more buyers here, right? So if this is the case, we want to find that correction. So we want that correction to come and then the continuation to start. But when that continuation is starting to start, we're going to take this 1 hour time frame and we're going to scale down to that 15-minute time frame, right? So since we're going to scale down to that 15-minute time frame, what we're going to see right here, so once you're going to see this right here, you're going to see, I'm going to just do 1 hour time frame, and then we start to see price progress back up. And we'll be looking on the 15-minute time frame at this point, right? And you'll see price start to progress back up. And then what you want to see on the 15-minute or even the 5-minute is price fail to go higher. Once it fails to go higher, you want to start seeing it break those support levels that it had. And by this time, you should already see price well below this price level. So we're just going to draw it in the same area. You're going to start seeing price go well below that level, that level that you're looking to sell price under. And the reason why you can now take a sell is because everything correlates with each other. So this 1 hour caused the indication. It caused the new low, right? This 1 hour caused a new low, right? So since we caused the new low, this is our new low too as well. So I'm going to go ahead and drag this across. This is our new low as well, but this is our 15-minute time frame. You can even say 5-minute TF, whichever one you can see it clearly on, right? Whichever one you can see your swings clearly on is the one that you can use, right? So with this being said, we see that price ends up failing to make a high. So this is our highest point, and then we see price make a lower high, and then a lower high again, and then we have this support right here too that it broke. So not only is price building lower highs, but it's breaking supports on the 15-minute time frame, and now it's breaking below the 1 hour time frame. So that gives us enough confluence to enter a sell trade. It gives us enough confluence to enter a sell trade when price starts breaking that level, and then we can put our stop loss here, and then we can target all the way down here, right? So that's what we're looking for when it comes to trading this way. We're just waiting for that correction to happen, looking at it on the 15-minute time frame, scaling in. Well, you're already on the 15-minute time frame, but when you scale in, you want to find that same bearish structure that you had before. So you're basically looking for ICC, but on a 15-minute time frame. ICC is basically the indication, the correction, and continuation. Yeah, so this is the way that I take my entries. All I'm doing is scaling down, seeing if I can find some kind of, extra confluence of price doing the same thing that I'm looking for. So if I'm looking for sales, I need to see all the time frames line up with each other. So if I'm seeing sales on the 1 hour, so that means that new low. This new low also means like wherever this new low is coming from, so that indication part, this is where your sell entry should be. So if price is still correcting up, let it correct up. And as it's correcting up, just monitor it on the 15-minute time frame. So I'm gonna show you a prime example. So first we're gonna start by looking at the fact that price made this indication right here. So price is on an indication right now. We can see on the 1 hour time frame that it is breaking above a swing high. So overall, these are my swing highs. Let's go ahead and make this blue to, all right, so we have our swing highs right here. And since we have our swing highs here, we know that there are sellers pushing the market down at this level. So since we know that above this level, this is telling us buyers are taking control anywhere above this level until it finds a level of sellers. Now, how do we know when a level of sellers are here, right? How do we know when that is here? So once we start seeing that price is making some rejections, what we're gonna do is we're gonna now say, hey, let me jump on to that 15-minute time frame. So when price is making a new high, so as price is going up, and you see that it's a new high, so you see it's breaking swing highs, then you need to go ahead and just scale into that 15-minute time frame so you can already see when the correction is happening, because the correction could happen pretty fast, it can happen pretty slow, but you always want to keep note. So what you want to do is keep marking your highs. Every time you see price keep making a little bit of highs throughout the session, keep marking them. So this one only kind of did it once, and then it kind of just went up the whole session. So then we can see that price gets to this level, and then it starts making a fall. It ends up holding, so it ends up stalling for a little bit, and then we can see price makes a support, but ends up breaking it again. So this is letting us know that price is still on a downtrend on a 15-minute time frame, right? So remember also as well, we're looking for buys. So all we're doing is waiting for the structure to change back bullish, right? So here we have a lower high. So that means as long as price is still under here, price is still considered bearish, right? So continue, and then we can see that price still makes more lower highs, another level of support that ends up being broken, so price is still on a downtrend. And then as we continue, we can see that price once again still breaking support, not going over the lower high, so we still have this. So once again, we still have more supports being broken, price is still going down. So let's wait until, okay, boom, now we have price make this low. We can see here that price pushed up. So from this low, buyers kicked in a little bit, tried to push price up, and it failed to do so. So this is another lower high, right? So since we have this lower high here, we can even scale down to that 5-minute time frame if need be. So since we have this lower high here, and you can even see here, since we have this, I don't know what that was. But since we have this lower high here, I'm gonna go back to the 15. But since we have the lower high here, we now can see that price has the support. Same on that 5-minute time frame. We can see that price was holding the support. We're above so remember, once again, we're above that level where bullish potential push price up anyways. So now we're just looking for price to change trends. So remember, if price is breaking above a lower high, this is letting us know that there are no sellers to keep the market down. So remember, this is our lower high. This is our lower high. This is our lower high. Lower high. Notice how when price buys up, it hits that lower high, sells. Hits that lower high, sells. Hits that lower high, sells. This whole time price was fighting between buyers and sellers. Sellers kept control. Boom, sells. And then price makes a lower high, sells. Now price buys up above the lower high. So now we're gonna think in the mindset of, okay, price is now back above this lower high. This lets me know that price is becoming bullish. We can see rejections to the downside too as well. So now I feel comfortable with being able to take a trade because we are above that 1 hour resistance level, and then we are seeing that on this 15-minute time frame, the trend is starting to change back. And even then, we can say target here, and then overall scale out to that 1 hour time frame, and then target this overall, because this is where everything started in the first place. This is our new high. This was our swing high. Price went on a correction. So if we go to the 4 hour time frame, we can see that this was a whole indication for the 4 hour time frame. So this was a whole trend for the 4 hour time frame, and then we had the correction, and then we scale from the 4. So let's say we scale from the 4 hour, seeing this indication, then we see that price ended up correcting. Once it corrected, we then scale down to a 1 hour time frame. So now we keep it in our heads, oh, the 4 hour is bullish because it has a new high. So all we're doing now is waiting for the 1 hour to go back bullish, which then it did. So then the 1 hour went back bullish because we can see price sold off here, made a support, right? So 1 made a support. And this is for the 4 hour, right? 4 hour makes a new high, sells off. We're looking at the 1 hour. We see that the 1 hour made a support, tried to come up, made a resistance, sellers are sitting at this level. So now since we know sellers are sitting at this level, we know that this is the level that price needs to break above. It ends up selling, new low, comes back up to this resistance, sellers kick in. Sellers try to kick in, but it's out of session, right? Notice how at the end of the session, price starts to buy up super strong at the end of the session. That's what price did this time. Price ended up finishing off what it started from yesterday, right? So all this right here is fake news. It's just fake volume. You want to normally trade around two hours most. If you want to trade out of session, try to trade around like 6 if you're trading Nasdaq, maybe 6, 7, but you really just want to be careful and trade at 9:30, 8 o'clock. Those are the times you really just kind of want to be in the markets. But overall, just stay away from trading the fake volume. So with this being said, we can see that price finishes off and becomes bullish. So now the 1 hour is aligning with the 4 hour. So the 4 hour is bullish. It ended up correcting. Now the 1 hour is back bullish. All we do is scale down to a 15-minute time frame, even a 5-minute time frame, and wait for the 15-minute time frame to align with the same bullish pattern. So remember, that 4 hour was correcting. What do? We scaled to the 1 hour, and we waited for the 1 hour to go bullish. Now we're on the 1 hour. The 1 hour goes bullish. So our indication starts here, it ends up correcting here. What do we do now? Since it's correcting, what do? We scale to the 15-minute time frame. So same thing. 4 hour made a new high, and it started correcting. So we went to the 1 hour time frame. 1 hour time frame made a new high. So now we scale to the 15-minute time frame, and we look at that entry. 15-minute time frame goes bullish. So then we know it's above that it's above that 1 hour time frame. And if you want to be safe, you can also use that 4 hour time frame. So above this level, you can even place a position here too as well, because it's above that 4 hour level. First, look for this target because that is where the initial indication started. But overall, you want to target that 4 hour high. So go back up and target that 4 hour high, because whenever you're buying price, you always want to take your buys to the sellers. Like I said in my live the other day, normally whenever you're trading, you want to think about it like this. So if you have an iPhone and you're trying to sell it, you don't want to sell your iPhone to somebody who already has an iPhone. You're going to sell it to somebody that doesn't have an iPhone because they're looking to buy it. So same thing with your trades. You're not going to take your buys to somebody who already has buys. You're going to take your buys to sellers. And if you're a seller, you're going to take your sells to a buyer because they're looking to buy your sells. So this is our setup, and this is how we correlated all the time frames together and used it to our advantage to be able to place these trades. And then overall, we're going to look for that volume to kick in. So once again, that volume, as you can see, New York session came in and everything is following with the volume. And then long term, we're going to look for price to get to that level. Oops. Yeah, I can just play through. It's okay if it plays there. But yeah, so overall, we're just looking for price to target these highs, and we're looking for that move itself. As we can see, we get there. But that is how time frames work and how you're able to scale from one time frame to make it correlate with the other time frame. So if you're starting with the 1 hour, or if you're starting with the 4 hour and you're marking up, you need to make sure that the 1 hour is aligned with the 4 hour, and the 1 hour is, or the 15 minutes is aligned with the 1 hour. So just take your step down. So the 4 hour, 1 hour shall align with the 4 hour, 15 minutes shall align with the 4 hour and 1 hour, 5 minutes shall align with the 15 and 1 hour as well. So everything should align just the way I explained it. Today we're going to talk about marking up your charts. I normally use the 1 hour, 4 hour time frame. Normally I look at the 1 hour time frame. So whenever I'm looking at the 1 hour time frame, the first thing I try to notice is where is current price, and then from current price, where are my highs, where are my closest highs and lows from current price. So first, we're going to point out this one. So this is our current high. So right now, we know this is a high. And I can already see it's a higher high, so I'm just going ahead and mark higher high. And from this higher high, normally I would either go back down from where it started, because this is that level of support that we need. That level of support is where all this bullish momentum came in from. So I definitely want to know where that bullish momentum is going to come from, because let's say if we look for sales later on, this will be that first thing that we'll look for, especially for a target, because this is where that bullish momentum came from in the first place. And you can see how I have my sessions on, and you can see how London session plays a big role in trading GU, especially when you trade in session. You can see that there's a lot of momentum and a lot of movement. So keep that noted for later on. So with this being said, from this low, so now we have this low, this higher low actually. We have this higher low, and the reason why I say that is because you can see here was a high, and then from that high, this was our previous low, so our previous level of support. But what is very important now is that we have our higher high and our higher low, so we can confirm that this is an uptrend. And from here, we need to focus on what happens next. So after the higher high is created, we can see that price ends up selling down and creating this level of support. This level of support is still a higher low, so this higher low is higher than the previous one, and this would tell us that price is still in this downtrend. And from this level, since we have current price, it hasn't broken anything in between here. So what I would normally do is mark these up, normally with my yellow boxes. Boom. And now I would wait for price to break out either my higher low level or my higher high level, because remember, there are sellers sitting here and then there's buyers sitting here. And with that being said, we would look for which one is going to take most control of the markets. We know that if price breaks under here, then that means there are no buyers here, and if price breaks above here, then there is no sellers here, right? So as we continue, we see that volume kicks in for London session. So now we have a low. So this London session is the indication. Normally when the indication happens during session, that session is going to push down for that day, and then the correction is going to come later on in the day. Sometimes you can catch an indication and correction on the same day, but if it doesn't happen, don't be stressed out the next day or even out of session. It'll start to make that push back up, which is super cool. Especially on days like Mondays and Tuesdays and even Fridays, price makes that indication, and then coming into the following day, it'll make the whole move that it wants to make, or probably 2 days in advance, it'll make that final move. But with this being said, price ends up looking for a new level of support, and this level of support is created. And since this level of support created, we can see that buyers are sitting at this level. And since buyers are sitting at this level, this lets us know that if price falls under this level, this lets us know that there are no buyers sitting at this level anymore holding price up. But for the time being, since price is still above it, price still has the potential to buy up. And then we have this lower high as well. So I forgot to mention this. This is now our lower high because it is lower than the previous one. So as we see here, lower than the previous high. And then we have that fall. So this will make this a lower low. Right. So here, lower low. So lower high, lower low. So this determines now that price has switched from an uptrend to a downtrend. And this is what we overall want to look for. We want to look for these swing highs because they're overall going to tell us what trend we're on. And since they're following off the higher time frame, so since we're trading 1 hour, 4 hour, sometimes daily, these are normally going to hold way stronger than trading off the 5 minute, 15 minute for your structure. For your entry, 5 minute, 15 minutes is good, but for the overall structure, you want to use like 1 hour, 4 hour, or daily time frame. So here, price is still above this level. We look for a correction back up to here, right? But since price has fell short, that means that this is a good thing. So most people say, hey, price doesn't push all the way back to the previous level in some cases, and that is okay. That is honestly 100% okay, because price is not always going to do that. But this is okay because this lets you know that the sellers are getting stronger. They're not letting price have the chance to even push any higher than the previous level that it broke before. So in this case, price ends up making a level of resistance. Now, coming into this London session, this is tradable by even scaling down to that 5 minute time frame and then breaking it down from there like how we normally do. So looking at price with this resistance level, we can see that price has this resistance. Boom. A small high is broken, which is okay. It's cool. We don't really care too much about it. We can see that price ends up making a level of support. Once it makes this level of support, we can see that makes a new low, corrects, and then coming into London session, back into that yellow level that I have here, we see that once we make this indication, correction, and then coming into London session, we can see that continuation happened under this level. So this is a possible trade. This is definitely a possible trade for the scalpers. You'll put stop loss here, and then you'll be targeting the levels down here. And the reason why we're targeting the levels down here, because that is overall where that low was made, and then price ended up correcting. So you can see the uptrend started. We have that, I'm just going to mark them all, right? So we have that support. Once we have that support, we have a higher support, so that lets you know you have a higher low, and then we have another higher low, and then price is still pushing up, corrects, and then starts to break, higher high, support level, new resistance, comes back down, or these resistance make this level of support, so even here makes this level of support in here, and you can see it break down under this level. So these are also confirmations to let you know that price is breaking under this level, trying to sell. Here is where we see buyers kick into the market for price. Buyers kick into the market, push price up, which caused this high, but then that high fell short, and we can see the lower highs kicking in. So overall, all I'm doing is just reading the buyers and sellers, reading the levels. So overall, I'm just looking at the level, determining if buyers are sitting here or sellers are sitting here. Obviously, buyers are sitting here and sellers are sitting here to push price down. So I'm overall looking at the reaction and then playing based off that. But that's just a simple trade that you could have took throughout the whole London session. Whenever we trade this way, whenever we trade based off the higher time frame, scale down to the 5 or 15, when we do this, we are normally going to trade trends. So you can always catch yourself ending up in a trend that you can hold long term, which is what I want you guys to learn overall. So all I'm doing is scaling down to that 5-minute time frame. If the 1 hour is bearish, then I would go and find a bearish momentum or a bearish movement and bearish structure on that 5-minute, 15-minute time frame. So that's all we did for this London session. And then with that new low, throughout the session, you can see price is going down still. So how you can do the scaling out or how to exit is normally your target will be here. So this will be your first target, and that's already a 1 to 3. And since you're aiming for that 1 to 4, 1 to 3 area, I normally go for 1 to 4s. You can, trail your stop loss after this. Me personally, I don't like trailing the stop loss, but for some of the beginners, it is good to, trail your stop loss and, learn how to take profits. But throughout that whole day, I would have probably been holding throughout the London session. So once the London session ended, which is roughly, let's see, we're still going through session. We have that big push. London session ending. Still looking for that London session to end. And London session ending, we came right around here. So right around here, if I'm even still holding this trade, there's a lot of momentum that came from price coming back under this level. And we can obviously tell from the 5-minute time frame. So if we go to the 5-minute time frame, remove this, you can follow price just like this. So follow it with the lower highs of the 5-minute, boom. And then once you see this, price makes a lower high and breaks above this, and you can exit based off that. So price is making lower highs on that 5-minute, and once it breaks, you can go based off that if you already hit your target. If you haven't hit your target yet, in this case we already have, everything after this, you just need to follow with the 5-minute or 15-minute. So I'm pretty sure this was a 15-minute pullback, so if we scale, yeah. So the 15-minute made a low, scaled back up, retested this level, and then dropped again. So this would have just overall been a good trade. No matter where you close that, if you would have closed at the lows, or if you would have closed here, or if you would have held for the whole day and closed here, either way, it would have been a good session for you. But what that overall showed us was that on that 15-minute time frame, 5-minute time frame, we can make that entry. So overall, that caused price to make a new low in the market on the 1 hour time frame. So now we have a new low on the market. And the reason why this is our low now is because we can see buyers kick into the market and push price up in one direction. So overall, we will wait for price to continue to build that bearish level of support, or that bearish level, and then start to build up and start to give us that push to this level of support or level of resistance now, and hold above these levels. The only thing with this is what people have been saying in the videos and comments is sometimes price makes a low and then it makes an indication to the upside, or it spikes out somewhere or grabs liquidity, and how do they avoid that? So overall, as long as you're trading with the volume, you kind of avoid all the liquidity problems. There will be sometimes, like let's say on news days, where liquidity in the markets during session is still very volatile, and those are just things that you have to take with trading. Trading inside the volume times are going to be very risky because price is moving super heavy. But as long as we're sticking to the higher time frame, we overall can avoid some of the noise that is presented in the markets throughout the session opens, or throughout the sessions with volume. So as we continue, price is holding this level. This London session comes in, kicks down just a tad bit, and then pushes up overall. So it ends up pushing up above this level. And remember that level we was talking about earlier with the higher low? Notice how that level ended up becoming, you see how buyers were in control and push price all the way back up to this level? Look how that level plays now. Look how that level plays now. So overall, we end up having price push down. This London session probably would have been a loss because I'm pretty sure it consolidated the whole session, and that's okay. Trading is not going to be 100% trading this way, but overall, we know that under this level, price has the potential to sell, right? So since price has the potential to sell, we'll come back the next day. We'll count this London session as a win, and then we'll count this London session as a loss, right? And then coming into the following day, so the following London session, we see that price is coming under this level, and we'll scale down to our 5-minute, 15-minute time frame. Go to London session, we see that London session kicks off being bullish. Even though it's under this level, we can see that London session kicks off being bullish. So now we're not in this trade. The only thing that's going to get us in this trade is price to turn bearish. So what we're going to do is continue to mark our highs as price is making them, and wait for price to turn back bearish. So we're going to continue. Price is still making highs. Boom, price is still breaking those highs. And boom, notice how price makes a high, but that level of support that was made based off that high being made. So let's go here. Notice how price, if we scale in, price made a high, made a support. Failed to make a high, failed to make a lower support. So in this case, we can't say that this is bearish because it hasn't made anything. So now we're not trading because it's in between a high and a low, right? But then price makes a new high. So now we're trading in between this and this, and then price makes a level of support. So now we have this level of support and this high. Now we're going based off this. So overall, as long as you have a high and a low, that's what you're going to go based off of. So since we have this level of support, now this new high is made, and we're going to go based off this high and the support, because that's what we have in front of us to show us buyers are here and sellers are here. So since that happened, what I wanted to show you is look how price is starting to break under this level. This is very important because now we know London session, price is breaking above this level. I am getting ready to sell. And the reason why we're getting ready to sell is because now we have a lower high, price is starting to sell, and we overall can see that the trend is changing because price is breaking support. Remember, price is not going to break support just to be bullish long term, right? If we're seeing the 1 hour is bearish and we're trading in session and the 5-minute and 15-minute are becoming bearish, then this is letting us know that, hey, we're able to place a trade based off that break, put our stop losses above here, scale back out to that 1 hour time frame to get our target, which is that new low. And once we target that new low, that will be overall where we are swinging our trade to. Now, the safest way, because this is how I do it, this is normally how I do it, and I've been trading for 4 years, and I've seen the market during session, change trends and then overall go to those swing levels. So I like to, try to, take my chances, take the risk to get into that trade early. But the more easier and more safer way to do it is waiting for price to come down to that level. So coming down to this level of support, Once it comes down to this level of support, you're able to enter off price breaking that level. And you can see that there's a lot of volume because there's buyers sitting here. So you see that reaction towards the buyers. Once price gets to this level, the reaction from the buyers is pretty strong, but the sellers are way stronger under these levels. So since that happened, we can see that price ended up continuing under this level, and you're able to take that trade successfully under this level, or even from the change of structure on that 5-minute time frame. So remember, the whole strategy, the whole point is to use the 1 hour time frame, get on the 1 hour or 4 hour time frame, determine what the trend is, have that trend make an indication showing which direction it wants to go. Once it shows which direction it wants to go, you overall want to say, okay, price is indicating that it's becoming bearish, so I will look for signs that price is becoming bearish. But price is also going to correct once you have those indications. So as soon as you get the indications, price is going to correct. Once it corrects, you'll scale down to a 5-minute to 15-minute time frame, and then you'll look for price to go from that bullish to bearish. In this case, all we did was we seen that the 1 hour was bearish. We scaled down to that 5-minute, 15-minute time frame as it was correcting. As it corrected, we started to see the signs of the 5-minute and 15-minute time frame becoming bearish, and we traded it in volume. So if we go back, we can see that the time that we was trading was London session, and look how London session turned out for us. And then overall, since we're trading on that higher time frame, so since the 1 hour is overall making its move, we can say that, hey, this is something that we can hold long term. Obviously, take your targets right here. So this will be your first target, and you don't have to set a hard TP. So that means you don't have to set it on your trading platform, but you can kind of set an alert here and see how it goes, and then overall continue to monitor it as it continues to go down. So TP here, hold a couple partials, and see what price is going to do furthermore. So we have a swing low here, and we can say that, hey, we don't want price to come back above this level, right? And as we see price is doing another London session, it's holding as much as possible below this level. So we can feel comfortable with holding this trade a little bit longer, and just overall, monitoring the trade. We can see that price is making new lows, and we can see that price is willing to go down with those new lows. We just don't want price to make any kind of bullish structure, and we're still following price. It's still making those lower highs, and we're still feeling good about this trade because we have those swing highs. And I'm really good at doing it on the 15-minute and 5-minute time frame marking up, because if we scale out to the 1 hour, I'm pretty sure it's going to be the same highs and lows. But yeah, as you can see, overall, we continue to hold this trade throughout. We are on day 8. Today, we are going to talk about the trade setup that I took a trade on gold today. I'm going to break it down to you. So today, I was able to take a trade on gold for some sells. The reason why I took sells, so first I was looking for buys above this level, so above this level right here. And the reason why I was looking for buys is because the first time price ever broke above this this yellow box, so if we go to the 4 hour time frame, we can see that price has a swing high, 2 swing highs here, meaning sellers are sitting at this level and they're pushing price down. So sellers down, right? So sellers are at this yellow box pushing price down. If that doesn't make sense to you, I don't know what will, right? Sellers are sitting at this level pushing price down. They don't want price to come any higher than this. So if price is to come above this level, this lets me know that there are no sellers at this level anymore, right? And there's an indication. So this is our next level of sellers. This is the next level where sellers are at, right? So when price corrects, we are going to look for price to come above this level to do the same exact thing that happened right here. That's all we're doing. So when it comes to trades, all you're doing is looking for where the sellers and buyers are at, which normally comes from the swing highs and swing lows. You look for either a swing high or a swing low to get broken. Once it gets broken, whichever way it chooses will let you know if there are buyers and sellers in control of that level. So with this being said, price under this level sold. Why? Because there are sellers at this area of price. This area of price, under it, price has more potential to sell than it does to buy. So it doesn't make sense to buy under this level unless you're being risky, like I'm going to explain, right? Unless you want to be super risky and try to catch the bottom. There's no reason why you should buy under this level until price shows you otherwise that it's coming above this level. So once it comes above this level, you have any rights to place a buy. It makes sense, right? No matter where you place that buy at, you really want to place it where the initial break is, but no matter where at you place that buy, you can place it here, 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 here. Well, I wouldn't buy at the top, but you get what I'm saying. Anything above these swing highs has the potential to push above and come to these levels. So with that being said, this level of support, we can see that buyers are pushing price above this level. So since buyers are pushing price above this level, we started to see, this is actually what I did last night. Last night I took a little risk on the 5-minute time frame. I seen price make this level of support here, so I kind of bought off of this, knowing I wasn't supposed to. I just wanted to risk some money, put some money into the market because I was bored last night. I needed something to do. But the right place to do it is above this level. So my loss doesn't even count. Because I was being dumb. I knew I was doing the wrong thing, but I just wanted to make some money if, maybe price would have came up during out of session. But besides the point. So this level right here, remember, it came from the 4 hour time frame. So that level came from the 4 hour time frame. With that being said, let me make sure we still rolling here. We still rolling. This level here, we can see that buyers are sitting at this level, pushing price in the different direction, pushing price up. So the moment, and today we might just call this reaction, right? The moment that price breaks under this level, there's 2 ways that you can trade ICC, right? You can use the indication, or you can purely just go off the fact that price has built structure that you can go off of, right? And what I mean by that is, for one, price sold off from where the level of sellers were at. So the level of sellers kicked in from down here. We're already under a level where price originally sold from way back in the past. So if we look over here, we can see that price has originally sold from these levels down to these levels. We just need some more confluence. So what we're going to do is, once again, scale to that 5-minute 15 to critique. Your 4 hour, your 1 hour is to overall guide you into what levels you need to be using. You need to be using the higher time frame levels because these levels, they break, and then that means price is looking to go in that direction with a strong push. The 5-minute time frame is the preciseness. You just overall is the finishing cut to your trade that you need to have. Scaling down to this 15-minute time frame, all I did was I seen price was breaking below this level. It made a lower high. So these highs are lower than the previous ones. Even these are equal high. And it's breaking its own 15-minute level of support. So there's a support being broken. That's a bearish sign. There's a lower high in the markets on the 15-minute time frame. That is a sign. The 4 hour level that was holding price up. So once we go back, that 4 hour level that was holding price up, that is a sign. Price building that lower high from earlier and then selling off, that is a sign. These are signs that you are missing, that you are not, taking account of. You're like, oh, but there's a new high. I'm only going to focus on that. don't focus on one thing. Follow price and everything it does. Every single thing it does, it is for a reason. So you need to follow along with what price is doing because it's showing you, hey, I'm going to do this. And if it wants to do that, you follow it, right? Maybe I did want buys on gold. Maybe I did want sells on gold. Who knows? I was just following price. Price broke a level of support. Price made a lower high, broke a 5-minute, 15-minute level of support. So I was comfortable with taking this trade. So if you guys follow me on Instagram and any other of my socials, you definitely see me post this today. But the reason why I took this trade, and we can go back to that 15-minute time frame. We can go back to that 15-minute time frame. And the reason why I took this trade was because of those reasons that I explained. 15-minute, 5-minute break of structures, the 4-hour level of support being broken, 1 hour aligning with everything. The 4 hour is bearish, the 1 hour is bearish, the 15-minute is bearish, the 5-minute is bearish. There is no other reason why I shouldn't get into that trade. So what I did was, once again, took that time frame, 5-minute time frame, or 15-minute time frame, 5-minute, either one. If you feel like the 5-minute looks better to you, you can use the 5-minute. If the 15 looks better to you, use the 15. There's no right or wrong. Just do not use the 15 and 5-minute to build the structure. Do not wake up in the morning and mark your charts up on the 15-minute time frame and the 5-minute time frame. No, your swing levels need to come from the 1 hour or the 4 hour time frame. The higher the levels you go, the stronger the level is going to be. So if you're marking your charts up on the 4 hour time frame, it is going to be a strong push. It is going to be some strong momentum if price breaks your highs or lows on the 4 hour time frame. So with that being said, there's no reason why you should not be able to take trades like this. I only take 6 or 7 trades a month because trades like this, they go on for 2-3 days. You can carry them on throughout. I've already closed this trade, but like this is probably a trade that I could have held for a couple more days, but price got to support. I felt comfortable, so I was targeting this level here. Once again, I was targeting this level because that is where, if we scale out, come on, that is where our swing low is. That is where buyers came into the market at this level. So price soared all the way down to this level. Buyers got into the markets. They started pushing price up. Price started showing signs of being bullish. Of course, there's going to be some liquidation here before price goes back up on another run. But that is why I got into this trade. So I could probably do the same thing. Buyers start kicking into the market, start trying to push price up, gold starts to rally, whatever the case might be. You just follow the reactions. You do not tell the market what you want it to do. You follow whatever it tells you to do. So the market is showing you, hey, buyers are here, sellers are here. Follow along with what they're saying and just go with it, bro. Stop trying to be this fucking genie, bro. Stop trying to be a genie. You're losing money because you're trying to be a genie. That's why you're losing money. Just follow what price is doing. Stop holding yourself on one setup. Stop holding yourself on one trade. Get off of the smaller time frames, bro. With that being said, I hope you guys understand why I took this trade. And the reason why I took the TP down to this level is because this is where the next level of buyers are at, right? And the reason why I didn't go for this one or this one, because I know people are going to ask, is because from this level, the last low that price made from selling from this level was this one. And then this was the lowest low. So that means price is looking to take out the last area of buyers. It already is going to take out these levels, but it is looking for the final boss. The final boss is here. Today is day 9, and today we're going to talk about identifying trend reversals. I'm going to play the clip. I took this before I took the trade, or as I took the trade. Okay, so today we're going to be buying gold above these levels. So above this 1 hour level, we can see that price had bullish momentum. So from this level all the way up to here, there was a correction in the market, and now price is pushing back up. So if we scale down to the 15-minute time frame, we can see that price made a high coming into New York session. We ended up making a higher low, which is also a bullish sentiment. So we can see price push off this higher low and then target up to these levels. Currently, everything is looking good. Once again, turn on the session. As you can see, price is in New York session, so we're going to have that volume coming from New York session to tap up into these target levels, and that is because everything above this level is bullish. So if you see price was sitting at this level, and then there was a bullish movement, price ended up making a new high off that movement, we had a correction, and now price is pushing back up. Alright, so with that being said, this was the trade setup that I took. This is how it went. Once again, targeting up into this level, but the reason why, because a lot of people was asking me, like, oh, I thought price was going to continue to sell, right? Now, this is what I want people to remember. In order to identify a trend, you have to overall go back, watch video number 1. So go watch talking about trends. So as I was talking about trends, I told you the moment price breaks a lower high, that's when you need to be in your head. You need to tell yourself, okay, this is something's up, price is changing, something's different, because price should be maintaining the whole time. If price is going on a downtrend, it should be maintaining the lower highs. So every high should be getting lower and lower. If that is not the case, then the trend is changing, right? So in this case, right? Let me find a different one, right? Price is up on that trend. I didn't do this one. The reason why I'm avoiding this one is because it's a little stagnant, but you can see price got low, retested low, almost a retest, low, and then price ended up going up on the uptrend for the correction, and then starting back over at low, or just this low, and then price ended up going bullish one more time, and then from here, low, and then so forth, right? And then this low, right? So from this low, it dropped all the way down to here, pulled back, made another level of resistance, and dropped to sell again, right? But I want you to understand price is always going to maintain a structure. I think you really have to understand that price is going to stay in the fundamental structure at all times. It might look different with the candles, they might look different, but everything is still the same when it comes to those swings. So we have our swing low, a higher low is expected, higher low, and then continue and so forth. We can go on and on, right? But the moment, so here, right, higher low, the moment price makes this higher low, and there's one right here as well, that higher low, because we can see that push, or we can just use this one. It doesn't matter which one, but I can see that price came down from this level, shot down from this level, and then moved back up in a very, I guess you could say, a very momentum manner. So we can use this one. But the moment price breaks that structure, you need to instantly stop thinking price is on the same trend that you're looking for. You need to then take a look at what's going on afterwards. So basically, to explain today, because I know that's what everybody cares about, right? Basically today, price was going on a downtrend. We was on a downtrend last week for gold. Great, that is good. We're coming into Monday. Price has a lower high. So price goes up, it finds a level of sellers. Once it reaches those levels of sellers end up pushing the markets down, trying to break even more, and price fails to do so, right? And the reason why I say price fails to do so, because if we is to look at this, so if we was to look at any other time frame, right? So let's say the 15, right? Price pushed down to this level, and yes, we did make a new low. We did go and break and make a new low in the markets. On the 1 hour, it's the same thing too as well. This is that low, and then we see price goes lower. But today, coming into the markets, you can say, yeah, we have a new low, but that means price should respect this is our lower high, right? Even the fact, so even right here, right? even though these are giving us new lows, price respects the fact that it has that lower high, right? Even with anything over here, right? So if we go over here, if price is bullish, just because it sells doesn't mean it's not going to respect the support levels that it has. Also, along with the highs, it's going to know like, okay, this is the high, and if I'm going to be bullish, I have to break that high. Same in this standpoint, it can't break those support. It's going to respect that as a level of support. If it breaks that, then you get this, then you get a whole new trend, right? So you got to remember, when price starts breaking structures, you need to overall look at it as like, okay, what should I be thinking now? And the things that you should be thinking is, okay, price has broken that lower high. I can no longer continue to think that this is only a downtrend. So now you have to be open-minded to what the trend could possibly be. So coming into last night, price ends up buying the whole London session, coming in from Asian to London. London session, it buys up and creates a new high. So we know above this level of 3,278, we know price is going to push from 3,278 all the way to 3,296. Then we get a correction. We still haven't traded the markets yet. You still don't have to trade the markets, right? Because we can trade gold in New York session. So New York session for me starts at 9:30. That is when the bell opens, right? So with that being said, price pushes all the way back down and retests this level. Now in this case, price is grabbing as much liquidity as possible. Now I already can see the comments, oh, it's just breaking retest. In this case, it is a breaking retest. In this case, you could call it a breaking retest. I don't see it as a breaking retest. I just find it as a correction. And then what I would do from here is scale down to that 15-minute time frame and then turn your session. So if you're looking for sessions, it's going to be Sessions Junior FX Addict. It's got 2.2 thousand people using it. And yeah, that is it. So for people that keep asking me what my sessions is, there you go. All right. So with that being said, this session is New York. So the red one is New York. Let me make sure I got that color right. That red one is New York. Right? So as we start to see in New York session, and this is 8 o'clock, 9:30 is roughly around here. 9:30 makes that push above. We see rejections towards the downside, showing us that price is not trying to go anywhere lower. What you can do, if you don't see anything on here, scale down to the 5-minute, right? Scale down to the 5-minute. So your first confluence can be, okay, price is above this level. Normally, I just enter when price goes back above this level, and we have rejections to the downside. I see price came down, it went back, it went up, had some resistance, same thing over here. So the same thing over here. And then there was that reaction. We got that reaction above that level, that strong push. So this tells me that buyers are sitting at this level, pushing up price. So I'm going to go ahead and delete this so you can see the candles. So you can see price here. It's got stagnant, stayed here, and then price pushed up once the New York session started. 9:30 was roughly around here. So right around here, price was kind of stagnant, came down, retested in these levels, and then had another push up for 9:30 coming into 10 o'clock. So these are things, and also here, like if you didn't get in around that 9:30, 10 o'clock, price came back down, retested these levels, and still respected the fact that this was a level of support. It respected the fact that buyers were sitting here pushing up price. So you can see that once people got down to this level, you can see that the buyers kicked into the market pushing the price up. So this lets me know that there's buyers sitting here, and they're not letting price push down. So if price is rejecting this constantly, this is letting me know, okay, this is my support level, and price is not going anywhere below this level. And if you put that along with the fact that we've already had bullish sentiments above this level, so if we go here, and we already tie this in with the fact that we've already been bullish above this level, then everything works out in your favor once you press that buy button. A lot of people call the trade. If you're not in the Telegram, I would definitely join the Telegram so you can definitely stay in the loop of what's going on. But I've seen that a lot of people got in the trade, and I'm proud of you guys. I hope I continue to make the teachings very, very simple. So once again, all you're doing is looking for your indication. Your indication is normally going to be the first breakout. You're going to be on the 1 hour time frame, so we're going to be on 1 hour time frame. Let me go back to my original chart. Boom. We're going to be on that 1 hour time frame. We're going to see that indication. The correction is going to happen, and then we use the volume coming in from New York session to push the markets in the direction that we wanted. So notice how price only pushed in one direction the whole time in the markets. So that's something you want to be in, or that's something you start to notice. Like you cannot be getting in and out of trades all throughout the day. Like normally when price is ready to push, it pushes in that one direction for mostly the whole session. So notice how this was all like after right around 12, like as soon as 12 hit, price started to take off and it was smooth selling. But by that time, you was already up a couple of pips in profit anyways. And by this point, you feel super comfortable in your trade and everything else is just risk-free at that point. So then once you get to the target, remember, when you get to your targets, set soft TPs. So basically what this means is, what gurus like to say is TP1, TP2, like those are your soft TPs. You don't want to put your limits or your orders at this level completely, because then you can have price tap that level, show a little bit of resistance, because remember, sellers are sitting here, right? So whenever you're in buys, you're always targeting the swing high made on the 1 hour time frame. So this 1 hour time frame made this swing high right here. So let me zoom so you can see it. It made this swing high right here, price pushed back, high or low, and then we use that momentum. Now we have a new swing high, right? So whenever you're buying, you're always targeting the swing highs first, and then you're looking for price to continue just a little bit more because you're using that 1 hour time frame. So normally when you're using that time frame, price is making that higher low, and then you need that higher high. So just like I said, when price is trending, it's going to look for that higher high, create a support, look for a new one, and that's how price trends. You always want to catch the trends, and these are the ways that I'm teaching you to be able to see this so you can catch the trends, because there's people now in the Telegram that are holding gold buys and they're up in profits, and you know what, gold can keep buying and they're going to be in this trade for a long time, and they'll be able to profit off of one trade and they don't have to trade for the rest of the month. That was today's setup. Now we have a new high. Price is going to most likely give us a correction back under this level, and then we're going to continue to trend later on. Let's see, because this could change, especially with the fact that it is bearish. So if we go and scale out, we can see that the overall trend is bearish. We was able to capitalize off of buys today, but there is a new indication to show us that under this level, price is going to be bearish. So we're going to wait for that time to come. But for the meantime, price is acting bullish on the 1 hour time frame. This is the time frame that I use the most anyways.
Today is trading day 10. Today I'm going to break down overall how to mark up your charts and how to see the swing highs and swing lows pretty easy.
You don't need many levels to trade. You don't need a lot of levels. So I'll be seeing people mark every single thing on the daily, the 4 hour, the 1 hour, all these different things. It's just a mess. Your chart looks a mess. All you need is the previous swing highs and swing lows. So the biggest thing that I'm going to get into is you only need 1 to 3 days, or let's say sessions. Only need 3 sessions, 1 to 3 sessions. All you need to do right now, indicators, turn on sessions. And then gold trades in for London and New York. So turn this off. We have 1 day. We have 2 days. 3 days, 4 sessions, so 3 sessions. This is all we need. To be honest, sometimes you don't even need that many. But if you really want to find where your swing highs and swing lows are at, you're most likely going to find it in the next 3 sessions. What we do from here, I've already previously marked this up. This is what my chart looked like a few minutes ago at 2:06. It is currently 6:27. So 4 hours ago, this is what my chart looked like. And then New York session came in and then got that push and everything. But that is what my chart had looked like. And the reason why I marked this level is because this is a level that I seen that price came into after having that bullish push. Once it got to this level specifically, it took a turn. So things like that, I'm like, if price came all the way here, it was really bullish, it could have kept going, but when it got here, it stopped. So that must mean sellers are here. Boom. Common sense, right? See? Common sense. So if price gets here, that means sellers are here. So now when price makes a new high, because obviously this is a new high, look at all the stuff that it broke previously, and we're not going all the way back just to find a new high. We can obviously see that the price was slowly breaking down onto a downtrend and then it zapped out of nowhere, right? Anyways, with this being said, once price makes a new high or a new low, in this case a new high, you need that level of support, because this level of support is what you're going to play off of, right? So now that we see it now, normally I don't mark all this, but for you guys I will mark it. But this is the level that I chose. The reason I chose this level is because we can see price is going down, and the reason why I didn't mark this one is because price came back up, so I just count this whole thing as a swing high. You can see price came here, reacted, tried to come back up, reacted again, so I just count this whole thing as that swing high. But anyways, the reason why I marked this one, and once again I mark up my price action on the 1 hour time frame, but you can do the same thing on all time frames. Everything you're looking for on the higher time frame, you're looking for on the lower time frame. Nothing changes. Just because the time frame changes doesn't mean price action change or structure change. Market structure doesn't just change the rules of it, or it doesn't change the fundamentals of it just because you went down a different time frame. So once again, the market structure is still the same. Higher highs, higher lows, higher highs, higher lows, lower lows, lower highs, lower lows, lower highs. Nothing changes. The reason why I chose this one is because we can see price came into this level, and we can see that price reacted. It reacted a couple times for me to make that decision, but it's okay because we have a new high. And overall, I'm just looking for price to see if it's going to continue to make new highs, or is it going to break down, whatever the case might be. In this case, we'll be in a no trade zone. A no trade zone is when you have a high and a low, but no indication. A no trade zone is when price has a high and low with no indication. So you have a swing high, swing low. If you need help with your swing highs and swing lows, pivot points high and low. This will overall help you and guide you into a decent direction. Do not solely depend on the swing highs and swing lows. Turn it on, see if you got your swing highs and swing lows right. Some of the swing highs and swing lows that price chooses, you're just gonna have to play around with them, because overall, I don't use these, but some of the swing highs that it marks out, they can be pretty valid. But I just overall look at it. I don't know. I'm really strange when I see some of the highs that are marked. Like I wouldn't mark that. I don't think I would mark this. Yes, I would. Okay, it's pretty accurate. There's some times where this thing don't be accurate, but it looks like it's pretty accurate right now. Maybe they updated it or something. I don't know. But sometimes this thing be kind of off. It be marking some of everything on. But anyways, turn that on, and just based off of what you see, mark up your swing highs and swing lows, or even test yourself. Mark up your swing highs and lows, and then turn it on and see if you're right. Anyways, we are now in a no trade zone. Boom. So that literally means no trading, no trade zone. So we don't trade in this zone. We can drag this all the way through. So in between this high and this low, we never place a trade. With that being said, we have our first indication. What is an indication? That indication is when price breaks a swing high or swing low. So indication is when price breaks a swing high or swing low. So indication is not something we trade. Don't trade the indication. No. Don't trade it. It's a breakout. So boom, don't trade the indication. So no. This is only simply giving you evidence that price can go further down under this level. Because remember, the whole point of that indication is to tell you that it can go down. Because remember, when we was in the no trade zone, it didn't want to go down anymore. Right here, it didn't want to go any further down. Right? So all in this area, it didn't want to go down. But then something here made price go down. So that shows that price can go down. And this was all Asian session, so pretty much I didn't even, I wasn't worried about this. But then we had this strong bullish candle to the upside, this strong Drake candle to the upside. And it made a high. It made an indication to the high. And this is why we trade ICC. Because if you would have traded a breakout, you would have been fucked. You would have lost all your money. Now, since we have an indication on both sides, we just wait for price to have some volume. So once again, I'm going to turn this on. As we see here, London session didn't move. It didn't come back above our level. Multiple wicks out. But honestly, it's like literally in the beginning of London session, it came and wicked all the way down, and then came up here and wicked out. You should have known, just like, okay, maybe I should just wait, right? So even if we go here to the 15, this is our entry level, we can obviously see that price had no type of structure of what it was going to do in the first place, right? Anyways, back to the 1 hour. So no trade zone. We have an indication to the upside, we have an indication to the downside. We're going to go here, and we're going to look at London session didn't do anything, but look at New York. Since we have this indication, we know anything above this level is going to be bullish. New York session came above this level, closed, gave us a close above this level, and then the next candle bullish. Right now we're getting rejections to the downside. We might get another push. Let's see how that turns out. But yeah, you see how I'm able to, and once again, I also place the trade right around this level. I'm gonna play the clip. Yeah, let's just play the clip. Looking for price to go bullish above this gray zone. As you can see, we have a high. Price is holding above this level of support. We got this push right here, so I'm looking for price to go bullish. I'll put my stop loss under this level right here. So 60K. 60K stop on both. Scale out, see if I can get it. Yeah, there we go. And then look for this target right here. I'll try to go up a little bit higher. I really want to target here, but that means my risk to reward is a little bit bad. But I'll get the 130 for both. And then let me see what I can do here. Scale down to the 30. Yeah, I'm gonna try to scale in more. Boom. But yeah, I traded price above this level because I knew that price was going to have that potential to be bullish, because we already have price breaking above the swing high. We already have that level of support that price didn't want to go down. Oh, that is another thing too. Matter of fact, I can't even say this is a no trade zone. Let me take this away. All right. So boom. We have that low and price made that high. Remember how I said when price makes a new high, it has to make that level of support? Yeah, let me not forget about that part. This level right here happens to be a level that price no longer wanted to go lower. So with this being said, since we had a new high, this became our next level of support. And trading above this level is where price went bullish. So initially my stop loss was right around this level right here. To be honest, I didn't want to go far out because of the risk to reward, but I had to take a bite for it. Like the risk to reward is a little bit off, but I knew what the trend was on the 1 hour time frame. So once again, this is a level where buyers was like, hell no, you can't come any lower than this. No, sir, you cannot go any lower than this. Right? And then above here, we already know sellers are like right here at this level pushing down. Price breaks above that level and gives us that bullish push. I'm not gonna lie, bro. This video should have clicked for you, bro.
Today is going to be day 11. We're going to talk about market structure today, trying to explain more about market structure itself and how you don't really need the whole ICC part of things. You can just use market structure and price action on the higher time frame. So I trade pure market structure, swing trader, intraday trader because I do probably hold a trade for maybe a day, and then if I can, I'll hold it for more days. But most of my trades so far has been probably like 8 to 12 hours, some 24, and then a couple I've had 3 or 4 days of holding.
I'm going to show you market structure and price action. Basically, let's start off with the fact that the market moves in trends. These trends are solidified more on the higher time frame than it is on the smaller time frame. So the higher the time frame you are, the stronger that this trend respects itself. People that can be scared of trades, first of all, trust yourself, trust the trade, trust the overall market structure. Market structure is just a swing high, swing lows, building up, and basically building bricks. You need building bricks, you need clues. Market structure is going to give you high, swing highs, and swing lows. These are your clues, nothing else. Keep it simple. So 9 times out of 10, I just follow what price does. I don't try to predict it. I just look for the clues. Once I see the clues, I get into a trade. Well, that's it. Once I see the clues, I get into the trade. We're looking at BTC. What made me take this trade? I was in sales previously. Price was selling under this level. So I'm going to go ahead and take all this away. I'm going to take these alerts away so you can see. I set up a lot of alerts. So you're going to see way more alerts. Like look at this 99 plus. Alerts, 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 alerts. On everything I do, I feel like alerts is the key thing that's what's kept me this far. It is setting a lot of alerts, walking away from the charts, and waiting for price to hit those levels that I'm looking for. So backstory on this, I was selling price under this level. So as you can see here, price sold down to this level on BTC. So I was looking for price last week to sell down to that level on BTC because anything under this level will have selling potential down to here because we already see the reaction. We already see that price was holding up buys here. And then the moment it broke, it ended up selling down to this level. There's a correction in the market, and then price ended up selling back under here. Again, all I do is trade reactions. I'm just basically explaining. Once again, and this is not a break and retest. A lot of people always try to say, oh, ICC is just break and retest. And then they'll be laughing because it's like, oh, it's break and retest. Okay, if it was break and retest, it would be a break. It will be a break, retest, and then getting here, right? Instead, I'm doing a break. Price ends up giving me an indication. The market corrects, grabs as much liquidity as possible, and then makes that second push down. And I'm just overall, because break and retest, even if here, right? Let's say if we broke here, made that low, retested here, you would have been in a trade and got stopped out later on. So the way I trade is not break and retest. All I'm simply doing is looking at where the market has a level at, seeing what price does under that level, what type of reaction it gives under that level, and trading only that reaction. So I'm only trading under this level because we get that bearish reaction. So that's to clear up break and retest. This is not break and retest. It's just simply following the market structure and the trend. So with this being said, that was the sell that I took, and we ended up selling below this level. So selling here, selling here. So if we see here too as well, so once we sold that first time, we made this low, and this is going to be the main key point here. We sold and we made this low. Next thing you do, so it's going to be both ways. If price makes a low, that's because it came from making a lower high or whatever the case might be. And once price makes that low, and in this case, we're on a downtrend. So there's going to be a lower high before you get that low. So this is the highest point, and you're going to track your highs. This is the highest point you have at the current time. This is the lowest point you have at that current time. So I'm going to drag this across. This level sells. We get here. So in between this level, we have sellers here, buyers here. So no trade zone, right? We don't know what's going on. And yes, we're under this level for later on, which is going to sell. But I'm just trying to give you an example. The moment price breaks above here, anything above this level, no matter what, don't overthink it. Please don't overthink it. Just tell yourself, force yourself to believe that the moment price breaks above a high, anything above this level is showing you that it's bullish. And I know some of you guys are like, I don't know, I guess some of you guys don't trust in the higher time frame, but I need you guys to trust. The moment price breaks above a swing high, so breaks above, so goes above a swing high, anything above this particular level will be bullish. So at this level of 1,000 or 100,013, price will become bullish, right? Price is going to become bullish above this level and start making its way to 116 and then finishing off at 117, right? Don't overcomplicate it, right? This is what I was looking at to get this trade. Overall, this is what I was looking at to get this trade. Why? Because in this downtrend, we made a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, a higher low. This is the moment right here where price starts to become skeptical, and then you can say price is turning back bullish, right? And this is all for the correction, right? So then the correction happens after making a new low. Price ends up selling back down, going back under that level earlier, which is here, to sell. But then it fails to go any lower. So the thing you have to understand about market structure is it needs to continue. Price needs to keep going. If it's trending, it's going to keep going. This is one thing that people overlook. Trends don't just pause. It'll go into sometimes a consolidation for a bit to gain more capital. But if price wants to go on an uptrend or if price wants to go on a downtrend, it's going to keep going. Same way with gold right now. If we go look at gold, price chose to go on an uptrend ever since it broke out of that daily range. So as we see here, price was ranging for months on end. And then it chose to go on an uptrend. And look at it now. It's going to keep going until it wants to stop. So trading is not one of those things where every single day you're going to be in a different type of setup. You're going to be in a buy, and then you're going to be in a sell. You need to find something that's going to trend. When it trends, it's going to keep going. Look at NASDAQ. The moment it chooses to go on this uptrend, it's going to keep going. This is something that helped me make it click for me. So get it out of your head thinking, oh, since I sold on Monday, I should be looking for sales. Stick with the trend. Stick what price is telling you. Stop trying to predict the markets. Follow what is working. Follow the trends. You cannot be creative in this market. You have to follow what price is giving you. So with this being said, higher lows are indications to show you that price is looking to go bullish because this is a level that price is looking to buy from. So buyers are sitting at this level. So anytime you get or you feel like you get a higher low when you was expecting a lower low, price is overall showing you that price is getting back bullish. It's not going any lower than this. Buyers are holding pretty strong at this level. So we're looking to look for some type of bullish structure. Look at what price is doing at a level. If it's stalling, if it's not going down, or if it's not going up, price is fighting with whoever's in control of the markets at that point. Price gets to this level, and then it starts fighting for this position, or starts fighting for this price point. So at 109, price is fighting. Sellers and buyers are fighting to see who's going to be in control of the market. Sellers are trying to push down even more. Buyers are like, no, you can't keep going this low. Price is already as low as we want it to be, right? So from here, we can even scale down. So right now we're on the daily. I'm trying to delete this. Right now we're on the daily. We can scale down to the 4-hour time frame. This is where price gets interesting, because now we have price coming down this low, and we have this level of support, and we can obviously see here that buyers and sellers are fighting. And the reason why we can see that is because we have low, and then we have a small little high here. We have rejections up here, so we can see that price is fighting at this level. So then once price is done fighting for hours, so this is a few days. This is 2 going on 3, almost 4 days. Price is fighting for 3 to 4 days, sitting here. And then price breaks out. This is signs of price being bullish. But we cannot fully buy off of this. We cannot fully tell if price is going to be bullish for the long run. How can we tell if price is going to be bullish for the long run? Oh wait, let's go back to that one level that we marked up earlier. You remember that lower high we had that price sold off of the first time, and then price ended up going on that correction all the way back up to this level? Yeah. The same level had reactions here, showing us that sellers have, a very, very strong manner at this level. Right here as well, we have sellers in a strong manner at this level. So price ends up going up, and with me, I never feel like I miss out on anything. A lot of people be like, oh bro, you gotta call all this right here. Yeah, but I'd rather have something more secure. I have something more of a higher probability, because what happens if price would have bought up here, made a lower high, and just sold off? But there's a higher probability if price breaks above a level where sellers are at. So as you see here, as you see here, there was reactions of selling. If price is above those, so if it's already past those, above it, then I have more probability of coming out with a bullish reaction than, buying down here and price retests this level and sells off, right? So there's a difference. This can happen. So price comes up to here and then has a reaction and then sells, right? That can happen because the last level it sold from was this level. It came here, sold off from this level. So it can retrace all the way back up to here. Just as long as it doesn't break above here, we was good. And then it could have sold, but it didn't do that. We got to break above that level. We got to break above that level, or even a retest, quote unquote. You guys love that. Even a retest. And then this is actually when I actually seen price. And then I would scroll down to the 1 hour time frame. This is when I seen price. I seen price make a push above this level. I count this as an indication because we were above this level. And then this is what I seen. This is what I'm talking about with ICC, market structure, price action. Overall, I'm trading market structure and price action. ICC itself is just a way to explain price action to people that don't really understand it. So once again, me personally, I don't have to follow every ICC thing, because market structure and price action is basically what I'm teaching you. So when it comes to market structure and price action, if price is showing me that it no longer wants to go down, so as we have here, price is showing me it doesn't want to go any lower than this, and it builds itself back above this level. So I already have a support level here, right? A support level here, and also a break above here. I have price above that level on the 4 hour time frame. So that level here on that 4 hour time frame, price is above it. Check. Price has a high. We made a higher low. Check. Price is above the 4 hour. Check. All these things. Check. Right. So I see that there's a previous reaction here. Right. Check. Right. So since price is above this level, I feel comfortable in taking buys above this level because I'm looking for the same reaction here to happen. I'm looking for a price to have the same momentum again. So let's explain some entries. For me, as you can already see, my entry is above this level. Let me answer a couple questions. Sorry, do you wait for a close candle? No. The reason why I don't wait for a close candle is because I trust myself enough to believe in the higher time frames to continue to push the market in the direction that I'm looking for when price is above or below a reaction level. So price is above the reaction level. So we've seen previous sellers here. There's no reason for me to wait for a close here because price is already moving in that direction. So where are my entries off of? My entries normally come from the 15-minute time frame or whatever time frame I see fit of the markup. So in this case, 4 hour time frame markup, 1 hour breakdown, right? Scaling down to 1 hour, it really doesn't matter what time frame I get my entry on. It's all going to trend in the same direction as long as everything aligns. Because I'm pretty sure if we go to a 15-minute time frame, we can still see the same setup here. So we can still see that price ended up coming high, slowing down. So as we can see, a correction in the market gets to a certain point where it doesn't want to go down anymore, and then we ended up making small highs, so high, a retest back at this level, and then back again, a break above this level. So either way it goes, no matter what, you was going to see price buy at some point, right? On whatever time frame you was on, you was going to see price buy at some point. So it really doesn't matter what time frame you get it on, as long as you know that above or below the levels that you're looking for is the reaction that you're trying to get. So above this level, I was looking for price to go bullish, and what did price do? Go bullish. That's all I'm doing. I'm looking, finding a level. Okay, sellers are here. Above here, buys. Above here, buys. Simple. Keep it simple. Walmart trades are based off reactions because one thing it is, if price has done something before, it's most likely going to do it again. Entry points, anything above this level. So my entry point, as we can see here, my entry point came from here. Whenever price ended up making this level of support and then price retested and started to push up, this is actually where I entered because I seen that price was above that level on the higher time frame. So above here, this is where I was looking for price to be entering because we have that previous reaction above that level, right? My stop loss is obviously under a level where, if price was to break under that level of support, this would count as price being bearish and I check it out the trade, right? So all in all, I make everything pretty simple. And my TP is here because this is the level that price sold from. But as you can see, I'm still holding this trade because price is fully broken above this level. So I know bulls are in control above this level. We're past all the sellers. So now price is looking for the next level of sellers. And I actually think that is here. So somewhere up in this level. So it could be 19, it could be 22, 23. That is what I'm looking for. I can also show you Solana. This one I've been in and out. I'm not going to lie. So Solana, I'm actually in buys right now as we speak. And loading 40K one by one. And this is what I see on Solana. So if we go here, price above this level has a reaction. So as we go here, trust me, bro, trust me. All right, so here. Overall, building higher highs, so we can see that price at this level. So, boom, we have a selling level here, right? Selling level here comes here, higher low, higher high, higher low, fails to come higher, but another higher low, and then we get a push above this level. So that level that we previously sold from, that indication we had, it ended up later playing out here. So above this level ended up making a push. Solana made a push, ended up consolidating here later on, giving up and then selling off super hard. Sells off super hard. We have a lower high, a lower low. Then price makes a lower high, higher low. So once again, we have that same thing where price starts giving us clues. So now we have a higher low. We pick up on this higher low. Price ends up breaking that lower high it made, and now it's starting to build up. But remember, that level that we was looking at on the daily, or even not even the daily, just say the 4 hour. On this level right here. Remember, anything above this level was going to go bullish. What do? We came above this level, and we went bullish. right above this level. Right above this level right here. And price went bullish. So I'm looking for price to have the same reaction it had here all the way to here. I'm looking for price to push up to here. And yeah, I'm just looking at overall market structure itself and waiting for price to start making that push. And overall, I keep it simple as possible. Once again, keep it simple. Market structure, price action. Looking at the reaction, seeing that price above this level is going to be bullish. I'm not overcomplicating it like people. That's what separates me from pretty much anybody that I know that trades. Is some people like to keep it complicated and try to overthink it. All I'm looking at is, hey, price here, or let me do it this way. Hey, price here, add sellers. Price above it has buyers. Oh, price is above the level, buyer. That's it. I haven't traded gold since the 21st. So the 21st was actually here, if I'm not mistaken. When I bought price from here and came up to this level right here, I honestly thought price was going to sell. It stalled here, and this is where I closed. And overall, I thought once again it was going to sell from this level. I didn't know it was going to keep making all-time highs, but honestly, I don't know why I told myself that, because on the 4-hour time frame, it definitely made a higher low, so it could have kept pushing. And I don't know why I didn't get into this second trade either, but once again, it is what it is. The 28th price made a good, decent push above this level. I think I was kind of skeptical once again, because at all-time highs, I'm really skeptical. I don't want to be caught in a range. I don't want to be caught in anything. So I prefer just to, wait and see what happens overall long-term, even if I miss a couple points. If my setup isn't where I want it to be, or if I'm not, really feeling it, then I'll stay away from it. Overall, on the gold market, we do have a new high above 3,870. So anything above this level could potentially push up. Honestly, we can head to 4,000 at this point. And yeah, with gold, I haven't really much traded. You can see that we're building those high lows, those high levels of support. I trade crypto on Liquid, by the way. It pays a lot when it comes to trading Liquid and crypto. Well, I just prefer trading on Liquid in general. But currently, I'm holding a BTC position. As you can see, price is now above that level. So I'm going to go back to trading here. Price is above that high. This is the actual level that I was targeting, but we broke right through it. So this is letting me hold my trade. For the people that ask a lot, how do I hold my trades? I'm holding my trades more when price breaks above that target level. So you can see the first time. So this is what I should have did on gold, but I didn't. 1 hour time frame came into this level, had a reaction, of course, because there's sellers here. you guys know. You already know the rundown. Sellers here. So that's why we got the reaction here. Price came in with a reaction, but buyers were strong, so ended up making a level of support here. So small level here. And the reason why this is a level of support for me is because if we zoom in, we can see that price came down. Sellers kicked in. So sellers pushed. Tried to. Buyers were too strong. Buyers ended up pushing back. Right? So this level shows me that buyers are pushing from this level. Now, is it really strong? Yeah, it could be. Could be strong, but we'll have to see how price reacts to that. But anything above this level has bullish potential, so anything above here has bullish potential because it broken above the sellers that we had. If I can scroll up, the sellers that we had over here. If that makes sense. So with all this being said, keep it simple as possible. So price was sitting at 195, and then it bought up recently all the way up to 203, right? But that doesn't discourage me or anything. So if we go here on the 1 hour time frame, that's why I got this, right? So it was sitting on that level of support. Boom, this level of support. If we go back to the 4 hour, you can see what I'm talking about. So that same level of support here, sitting on that level, and then it bought off of that level, which is cool. In my head, I'm thinking to myself, well, I'm like, okay, well, I see that price has a new low in the market. Is the correction still going? Because initially we don't have any bearish signs yet. We have price come up to 211, and then have a rejection back down to 193. But price pushed up, but it didn't break over 211, so it's not bullish. It can be considered bullish on the 1 hour time frame because price is above those swing highs. So as you can see here, we have price above these swing highs. That indication above here, price corrected back down to these levels. It didn't break the level that it bought off of. So as you can see here, price bought. Price came here, it sold. This is the lowest level it sold, and then it bought off that level, right? So we have a high, higher low, higher high, another higher low. This could be potential move for a higher high. Now, this is why this video is very important, because you can have things like this. You can have things like this that confuses you on which way the market is going to go. So you'll get into a buy trade now, right? You'll get into a buy trade now, and then later on price will end up selling, right? So what I want to advise you on, it's not like I said, it's not always going to work, but it's best to be patient. I know it's going to be super hard to do that, but it's best to be patient and wait for extra confirmations. So for this 1 hour time frame, I'm going to show you both time frames and what you should be looking for. So this 1 hour time frame, if you're confused if price is going to go bearish or bullish, the 1 hour time frame, look at it already, you would have been stopped out most likely. Some of you guys make super small stop losses. But with this, you need to basically see more bullish direction, more bullish confirmation. So how are you going to do that, right? So for example, you see how price bought off this level. You see how price bought off this level right here. This is signs that bulls are here, right? Price can do whatever it wants whenever it's here, right? So this doesn't affect us if we're thinking it from the 1 hour time frame perspective. 4 hour is always going to be stronger than the 1 hour. 1 hour is always going to be stronger than 30 minutes. 30 minutes is going to be stronger. Yada yada. So overall, I feel like the 4 hour is still going to overpower the 1 hour. We're just waiting for the 4 hours to play out. But just for you to overall get a perspective, if you ever have a trade where it's contradicting itself on the higher time frames, sometimes the 1 hour can build into that 4 hour. So the 4 hour might look bearish right now, but the 1 hour is building that up. So what you would want to see is price have some rejections to the downside and start building higher highs and higher lows. So then from the 1 hour, we can go to the 15-minute time frame. All right. So from this 15-minute time frame, price already had touched there. Wow. Price already touched in the area on 109 where sellers are at here. That's pretty interesting. Maybe I'll take all this back. That is pretty interesting. But let me just continue with it, right? So if you think the 1 hour is going to go bullish, you need the 15-minute time frame to remain the same. Now, once again, I'm big on whichever higher time frame is bigger. So if the 4 hour has more bearish structure and it's clear to see, I'll go with that. If the 1 hour has better structure than all of these, I'll go with the 1 hour. But in this case, 15-minute time frame, we can see that price is building higher highs and higher lows as we have here, as we have here, and as we have here, right? And I'm big on marking the body closes because I feel like those are closed deals. Wicks are more like, hey, we've been here, but we didn't successfully get up to the level that we wanted to, so we're closing out at this level. So I'm big on body closes when it comes to marking things up. But with this, with the 15-minute time frame building up bullish structure, and we're still above, and we're still above swing highs that we had. So this gray area is where that initial breakout came from. This would still look to consider go bullish above 102 back to 110, 111 because of the 15-minute time frame is building bullish structure, right? And that's tagging along with the 1 hour time frame. So that's how you would see it if you were looking for buys on the 1 hour time frame. Now, if you were looking for sells, your market decision between that will always be under. It will be the same thing. You would basically take structure where if you're seeing sells, you want price to break a level where it shows you price can go bearish or bullish. In this case, bearish, right? So we do not trade until price breaks below a level of where bears can come in control. Sorry. So in order for you to sell, let's put it this way. Let's make a rule. In order for you to buy, it has to break above a swing high. In order for you to sell, it has to break below a swing low. In this case, if we're looking at only strictly the 4-hour time frame, the price will be considered bullish above that level, right? It still matches with the 1-hour time frame. So even if we go here, right here where price originally broke out on the 4-hour, we have this push up. So this bullish momentum above this level, a correction, stayed strong, price above this level, bullish, right? If price breaks that level of support, it will match that other confluence with that support level that was here, where buyers were once at. So as you can see, buyers were once at this level. Price broke under that level, which means anything under only this price point. Remember, only under the price point. It's not bearish in general until it breaks above or below a level. Some of you guys will see an indication. You'll see an indication, and you will only think the trend is supposed to be that. Just because you have an indication in a level doesn't mean the whole trend is that yet. It only becomes the trend when price is under this level. So we only say that price is bearish when it's under 190, 189, right? We only say price is bearish only under that level. So anytime it's above this level still, price can do whatever, it's still still bullish above that level, right? It's still bullish when it's above 194, 191. Price is still bullish. The moment it breaks 190, it broke in all the bullish signs. So every sign that we got that price is bullish above this level, these pushes off this level, that will all go out the window once price breaks 189. 189, right? So with that being said, your market decision has to get better when it comes to looking at market structure. Market structure is going to save you a lot, especially when you're looking at different time frames. So I don't stick to one time frame. I trade on most of the higher time frames, so 4-hour, 1 hour, and I swap through. I go look, see what I can find. Okay, the 1 hour, it looks pretty good to be bullish above 199. Anything above 199 is most likely going to go to 209, right? The chances of that are pretty high because we had that same bullish momentum before. That's all we're doing. We're looking for. So the best way to explain it is we're finding our swing lows and our swing highs. We're taking that swing high that we had. We're looking for that initial breakout and correction. Once we have that indication and correction, so once we have the breakout and the correction, everything else is just waiting for price to re-break back above that level again. That's all the market structure and price action that we're using. Is we're waiting for price to re-break above that level again. So in this case, price could go bullish because we've seen this break before, and we've seen the causes of it, right? We've seen the causes of this break. So I'm going to put this here, right? So we've seen the causes of this, so we know price is going to try to make its way back up and try to do the same thing because above this level is letting us know that sellers have no control. So as you can see, when I say sellers have no control, this basically means that buyers are going to push as much as free will as possible up into this level. It's like driving down the highway. If there's no cars on the road, if there's nobody to stop you on the road, you're going to punch the gas as far as you can until you get to a point where there's cars in the way and traffic. So it's the same way. Price is bullish. The next level of sellers is at 211, right? So bulls are going to maximize and use all the speed they can until they get to that next level of sellers, and then that's when price starts to slow down. But if buyers maneuver through the traffic, so if they get up here and they maneuver through the traffic, they move through the traffic and happen to get another free opportunity to push up higher, that's what buyers are going to do. And that's what the trend is going to do. If price feels like it still has some more wiggle room or it still has some more gas left in the tank to push at maximum speed, it's going to do so. Put it this way. You could be the guy that's slow Nancy on the road, going to speed limit, average speed limit. But if you see a Lamborghini speeding down the highway, you got to move out the way. So if sellers see that buyers are coming in full strength, they got to move out the way. And they're going to move out the way and let buyers continue to keep going until they run out of gas. Pretty much everything is the same way when it comes to trends and market decisions, making decisions in the market and understanding everything. All I'm doing is simply taking what the market is showing. So I'm looking at levels and I'm saying, hey, price was buying from this level. So we're going to mark this level first because it bought from this level. Pushed all the way up into this level. Why did it stop here? That's what I would question myself. Why did it stop here? And then price sells. And then when it keeps going, punching the gas, and then it stops. It's like, no, I don't want to go any further down. Why does it stop here? Oh, because there's more buyers picking up here. And then when I see this, I'll look over and I'll try to see if there's anything that it broke out of before. Where did this come from? So where did this low was coming from? Oh, this low came from when price pushed all the way up and got to this point. So then that's very interesting because then I use this. And now I can see above this level, price is repeating the same thing. So I'm going to drag this over and I'm going to look for price to repeat the same thing. Same way with that bearish momentum, right? I'm showing you what's going on now. And maybe by the time you look at this video, it might be at 210, right? Or it might be going for that sell. I still believe in the higher time frame, but that 1 hour time frame can definitely build into the 4 hour time frame. So the 4 hour could be at a shift right now, right? Right? The 4 hour could be at a shift. What you solely go based off of is just the market structure alone. So 1 hour time frame is above there, 4 hour time frame is above there. We have higher lows. Cool, right? But we still have this new low, which is why you can also think price could be bearish. But once again, price can be bearish under 189. That's why there's an alert here. There's no trade set, but there's an alert here because under this level, it is seeing that price can go from here to here. So from here to here is what we'll be targeting. Same way with this. I mean, I didn't see this one. I'm just now seeing it because it's making a move and pushing up a little bit. So above here, when we started the video, price was here, now it's here. But yeah, this is the same thing that I'll be looking for just on the sell side. So that will be the same thing. We have that indication, price corrected in the market, and then we're looking for price to sell back down to these lows, right? So it'll be the same thing. No matter what you do, the price action market structure will be the same thing. The setup will still be the same thing, right? So with all that being said, back on the 4 hour, what we would want to see is basically price build lower highs and then break that level of support under 189 back down to 174, or price, since it did break above this level, and if we scale in, we can see. Notice how price here didn't want to go anywhere above this level. It was rejecting, struggling to get above 198, and then it finally broke out at 198, went up to 209. Once it got to 209, sellers came into the market and they said, let's go for a correction. Let's push price back down for a bit. Boom, they pushed price down to 194. 193 is the lowest, or 191 is the lowest. So no breaking of the previous one because 190 was the last low. And then now we have 192, 191 as the low currently. And now price is looking to push with that same momentum back to 209. So all in all, we're making a market decision based off of the reactions that we previously had before. Once again, I'm saying, I'm super bearish on crypto because we have the new lows. Anything else I would just look as a correction for me. But if price continues to break above this, then my bias change. And why is that? Why does my bias change only when price is above this level? Right? Because now I have consistency and higher highs and higher lows. So if I'm looking at the higher time frame, it's okay to miss out one trade. It's okay for me to miss out one trade. I feel comfortable trading out, missing this one, and getting extra confirmation on the next one. Because the same thing's going to happen. Price still needs to make a higher high. Price still needs to make a higher low. Price still needs to make a higher high if it's going to go on a trend. Higher low, higher high. Still needs to do all that. So I'm going to see it regardless. It's okay to miss one because you can catch the rest if the higher time frame is building that trend, right? Over here, right? So that buy, it was like right above this level, right? Somewhere over here on the daily time frame, it was this. We got that indication. Price didn't break above it this time, broke above it the second time. Price push, right? Corrected. All this market happened. This is on the daily time frame, but I'm looking at it on the 4 hour. You can go back and rewatch it. But above this level, we was looking for price to go bullish. That was higher high, higher low, higher high, higher low, higher high. Respected that support level and still continue to push, right? There's multiple signs here that shows price was going to go bullish before it got back above this level. You could have taken advantage of it. And I'm just giving you an example of how price can go higher highs, or even like looking at not recent gold. Recent gold is so bad. Give you some better market structure, right? Let's just say here, right? Price goes on a small correction, and then we start seeing this being formed, right? We see a level of support. Price respects that. Obviously, we see prices respecting that. Even over here, respects all that. And then we have high here. Price broke above, indication, corrected back down to here. Price came back above that level again. So now we have highs, correction, still didn't break. So that's also one thing too as well. Don't get scared when price is correcting. As long as price is not breaking overall structure, you're 100%. Okay, I'm gonna go ahead and come back here so it's a little bit simple for you. Right, look at price. Higher, we have a low, higher high, higher low, higher high, higher low, equal low. Tries to make a higher high, fails to do so, but makes that higher low to let you get that extra like confidence, that confirmation. When price, if price doesn't give you that higher high, but it gives you that higher low, still stay in the game. Your stop loss is supposed to be under this level anyways, right? Price still maintains. We still have multiple opportunities, multiple signs before price makes that push. So we have a push, higher high, then it needs a higher low back at that same level. There's ways to capitalize off of everything. Then we get that, more momentum. What does price do? It gives us a full blown correction. Once a full blown correct, what can we do from there? Continue to do the same thing because we're gonna have the higher high. Price makes a higher low. The last level that we pushed off of was here. And the reason why I'm saying that this is the last level we pushed off of is because look at this. Price stepped on the gas, got to a level, had a reaction. I want you guys to take the time today to look at your swing highs and swing lows compared to the way that I'm marking my swing highs and swing lows. I want you guys to notice how I'm not going in the charts and I'm not marking up this. I'm not marking up small things like this. All I'm doing is going to the chart, and it's not me trying to make it like picky or anything. I'm just looking at the levels. Boom, I see that price got to this point, made a huge change in movement, huge change in direction. Came to this point, shot up to 3,750. It went from 719 all the way to 750 in this one move. Buyers are strong here. Price came here once 790 or 749, shot down all the way to 730. Once it did that, shot from 730 all the way back up to 760. These are movements where price is making decisions based off how many buyers and sellers are in control. Here, you wouldn't be marking this. You can just take note that hey, price is struggling to break above 751. Price is struggling to break above 751. Why? Because previous market at 751 shot down to 731. Right? We can take note of this. Price pushes up, gets to 757, shoots down a little bit, back down to 739. These are things we can take account of. But it's all, it's not the best because this is the main level that we have, which is at 760. 760 is what we want to see. So we have 750, 760. We know that these are both highs in the market. We know that 732 is a support level. So as you can see, support level on 732. So we already have our highs and lows. We need price to break above 750 to go bullish to 760. Right? Price above 750 goes bullish to 759 the first time. Retraces a little bit to get more momentum. Back above 750, where does it go? 760 with another push. Now it goes from at 760 all the way to 784. From 783, 784, it goes back down to 760. So now we know sellers are in control of the market, or sellers are pushing price or trying to push price back to those 760 levels. That's okay. We have buyers at this level. So this will be our indication, correction, and then price once again pushes back above this level and gives us more. So all of this is just me showing you that just looking at market structure alone can save you from a lot of market decisions and help you make the right decisions when it comes to pretty much trading anything, right? You can literally trade anything at this point, right? So look at this. Even though I feel like price is going to be bearish, but even if it doesn't go bearish, I'll trade the buys. If the buys look, Solana buys look way better than BTC buys, but anyways, I'm going to show you price. Sells under this level, cool. I see price gets to this level. I see a reaction, not too much, so I'll just use this one. Since everything's already played out, this will be my analysis now. Or what's going on here, I'll just look over here to see what's going on, right? I see that price got to this level, pushed up from here, so obviously we can see that there's multiple times where price comes here, boom, price comes here, price comes here. I see there's multiple times where price comes to this 400 or 110, it comes to this 110 level, 110.4, and it kind of has some buys up, nothing crazy, no crazy momentums. I see that these levels are getting lower and lower, not a crazy sign of anything. I see that price really doesn't want to go above 1,000 or 112,000. Pushes down, continues to push down, tries to break. It doesn't want to break. So now I'm seeing in my head, I'm thinking like, okay, and once again, I'm working off the 1 hour time frame, right? I'm looking at all this and I'm like, okay, price is not willing to break yet. This is cool, it's okay. Not really seeing much of a trend out of here. It looks like price is slowing down. The reason why I think it's slowing down is because price is only stopping in this 110 area to 109, right? Only stopping in this area here, right? And we have that huge rejection back down. So overall, I'm just seeing price is not trying to break this 110 level overall. Then we have a push above 110. Price tries to make a push, tries to make a run for it, but it gets stopped for a few hours at, what number is this, 112 or 111, right? Stops, it stalls for a bit, and then it actually breaks above 111. It goes from 111 all the way to 115. So this lets me know bulls can take control. If price goes above 112, it has potential to take itself to 116. So then I will take this and I'll just draw it across. And why would I draw it across, right? Why would I do that? Because here we're looking for the same momentum with the volume. Price got up to a level. Price gets up to a level. So we could look for that same momentum because it's all just buyers and sellers. So if I know buyers have more control of the markets above this level, I might as well take the chance to see if it's going to repeat itself again. Now, there's obviously going to be some stipulations with this because you need a new high for price to chase. Price is normally chasing some type of high or low. The market is always chasing some type of incentive. Some type of incentive, whether it's bullish or bearish, right? So with all this being said, since price is chasing this, price has no new incentive to chase. So the likelihoods of this decision could be very less. The probability on this is very less when you have no new high to chase. I'm not saying it's not going to happen, but the probabilities are lower. So now we can get into more of the market decision. I'm just kind of laying out my mindset. You have to be very precise in the things that you're choosing and why do you think the market is going to go and the way that it's going to go. But there also has to be a new incentive. Okay, well, BTC doesn't really have like a new incentive. We have that drop, a correction. Price pushed off the support because it didn't want to break anymore. But then this could still mean price is bearish because there's no new high, there's no new incentive. Price stalled here, it stopped. It came up, came down for a little bit, came back up, didn't break. So now it's a no trade zone for BTC. But when it comes to market decision, you have to take these things into accountability. Making decisions in the market, you have to be very, very careful at the market setup or the market structure, the price action that you're looking at, and making sure there's new incentives. For gold, for example, I'm going to give a prime example. Gold has a more higher probability of buying up to the new high because the gold has been chasing its own highs. So it has the potential to go to those new highs. I would rather stay away from trading something at an all-time high because of the amount of liquidity that was put into the market at a fast rate. For me and my setups, I don't think it would be the best for me to put myself in a position where it is more liable of price having random spikes, random pushes. Somebody can be like, okay, like we invested a couple days ago and prices went up 30% now, so let's like liquidate our position. You don't know what an investor is going to do when price is at its all-time highs. Same way with BTC. BTC was just at its all-time highs. And look how fast it came down. And a lot of people are going to be like, oh, because of the Trump tweet. Before Trump even tweeted anything, before he tweeted anything, there were signs that price was losing money. Not even losing money. People were closing their trades. Remember, trading is simply buyers taking their trades to the sellers and sellers taking their trades to the buyers. So there's a bunch of buyers. All-time highs was at like 124, right? 124. So there's a bunch of people looking to sell at this level, right? There's a bunch of people looking to sell at this level. Bunch of people, right? Price gets to this level. First time it touches this level, look. Just watch the market itself. Look at the reactions price give you. This lets you know a lot. I need you to rethink how you look at things. Price gets up to this level, rejects. Why is that? Ask yourself, why is that? Because there's some heavy amount of sellers here that's selling price, selling their BTC, right? Boom, first sell. Then buyers are like, nah, bro, we gotta keep pushing. Some people are getting in late, or some people are just now thinking that this is a small pullback and they get in for the next move. So then it pumps again. Now there's a new all-time high, and price gets to that new all-time high. It has rejections. Sellers are here. So people are selling now. People are starting to sell. Sellers push in. Boom. Nah, bro, keep buying. Boom. Comes up again, but this is the same level of sellers. Boom. Sellers are like, no, bro. Boom. Then we get this break because now this time price sold. It sold more than it sold the last time, which should be a red flag if you're a buyer. This time it sold more than it sold the last time. Price on gold or price on BTC crypto, it has a lot of value because there's a lot of momentum behind it, a lot of news behind it, a lot of hype behind it. And all this can then die out sometime. But there are signs. Back to market decision. You start to see these signs. So we know price is losing hype when it goes under the previous lower level that it was. So price, when it slowed down the first time, it only got to 122. So here, price came down to this level, 122, bought up from 122 and made a new height for itself, gained more popularity. It got to 125. And when it got to 125, kind of died for a little bit, slowed down. I wouldn't even say died, slowed down for a little bit. It's not obtainable anymore. But then the market starts to die for it. And then we have a break. But this time, it breaks lower than the previous low that it had. So this is a sign that price could be actually losing its value on it. And I'm going back to the actual BTC, right? Below this level of support, we know anything under 122 is going to give us that same momentum. There's pieces in here where you can see price tries to go under 122, but it fails to do so. Right? That's cool. We still have these lower highs. These are still signs. This is signs. If you ever feel like price is not going down, look at it if it's going up, because this is also a good sign too. If you're thinking sales under this gray area, which is what you're supposed to think, but price, let's say you got quote unquote faked out here, even though you're supposed to wait for that lower high. Let's say you got faked out here. Well, that's okay because the previous high we had, the previous level we sold from was here, or even here. Let's just say here, right? We had a level here where it was holding support, came here, came up high, low. And I don't remember what I said earlier. I don't want to mark this because it doesn't really show a significant change in direction, but I'm pretty sure on the 1 hour it probably looks a lot different. But anyways, let's say we have this high, low, tries to come up, wicks out, closes here, closes lower than the previous one. Since it closes lower than the previous one, we have a break. This is when it really comes into play though, because this is the level that we made this high off of. One thing I need you to also remember is go based off of previous push. So basically what this means is, if you mark a swing high, please just go back and see where that swing high was built from. Where did it push from? Because this is very important. Once you find this, you can make a decision under this level now. This is price where it pushed from. So this is where all this bullish momentum came from. So the moment price is under this level, that means market has no potential to be bullish. If price is under 1,000 or 122,000, where that bullish momentum came from, that means if it's under here, it lost that momentum it had right here. It lost that momentum. The moment it breaks, it lost that momentum every time price is only under here. So like I said in the beginning, if price is above that level, do not think price is going to be bearish. Wait for price to be under that level, and you have more higher probability under the level than you do above the level. So if price is up here in this area, do not say it's going to sell yet. Or do not take a sell yet. You can say it could sell, but don't go for a sell. Don't try to get into a sell. Right? But don't also try to not get into a buy. Why not get into a buy, sorry? Because price just made a new low. This buy is just reactions from price hitting that new low. So whenever price makes a new low, it's going to have some type of bullish reaction to show you that bulls are in control at this level. Bulls can take it up as high as they want, but they cannot break where the previous sellers were, right? So we're going to delete this, we're going to delete this, I'm going to delete this, right? I'm going to delete this too. And we're going to go back to this tool. So this is the highest point. We'll make this big for you. Right? This is our highest point. Price sells down. This is our support. Our low. Price has reactions. Comes up to this. Honestly, you can look at it this way because of the 1 hour time frame. So if we go to the 1 hour, it'll look a little bit better for you guys. So that's what it'll look like. You see price came up to a certain level, drop down, lower high, lower low, right? But let's just make it simple for you guys. Let me make it simple for you guys. Let me remove this. If we're looking at the 4 hour time frame, pay attention. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. Broken. This is signs of a change. In order for us to say that price is going to go back bullish, it has to make a new higher high. Once again, I'm okay with missing out on this higher high because then I have confirmation. Or the second scenario, price could come above here, stay above here. So stay above this level. So you see this higher high, even if price made this indication, if price stays above that level where it made the previous bullish momentum here, if price stays above that level and builds a higher high, it can build again, right? That's okay. There's some times where the market will actually liquidate more than what's possible or more than what we think. That's okay. There'll be times like that. But there's no reason you should get faked out because look at here. This is the time you're supposed to sell. If price doesn't give you that, if price doesn't go under that level and give you that, then you shouldn't be in that trade. This shouldn't be a sell. If you see price makes a high, rejects, goes to the low side, rejects, doesn't give you that lower high, it doesn't give you any other bearish confirmation, rejects this level, and pushes, you should be looking for those buys instead. But anyways, going based off previous push was here, it ended up being broken. This is signs that price is getting bearish. So then, as we see here, price builds up, but only comes to this level. So once again, look at how price gets to this level, and it's having all types of crazy reactions, even before it got there. Even before. Having all types of different signs. Let me turn this up for you guys. Right? And even though we don't go crazy on the wicks, look at how all this rejection was here. Rejection. Super strong movement down with a red candle back under this level. So now we know sellers are in control at this point. Pushing price down, price comes under this level, has some small pushes down to this level, which is good. It was going good. Price came down even more. It came to that same level. So if we were using the body closes, it touched the target. Once it touched the target, buyers came into the market. Boom. Look, buyers come into the market. They try to push price up. I'm not sure in which way this went up at first. Let's go and look at this. Oh yeah, so look, price sold first, came to that level that it was looking for, so the same level where the buyers were sitting, it came down to that level, just like how you want. Price showed some signs of bulls taking control, right? That's cool, that's okay. Price didn't break above the highest point, so this is our highest point. We had a sell-off, price changed structures, tried to correct. Once again, the higher time frame will always end up aligning overall. So what you're seeing on this time frame, on the 1 hour time frame, what you're seeing on here, you probably would have been scared. You probably been like, oh bro, price is going to go back bullish. But there was multiple signs on the higher time frame, 4 hour. So 1 hour is the higher time frame, 4 hour is stronger than the 1 hour. So once again, it goes back to what we're looking at overall on our other side, right? What I was talking about earlier, make sure this is not dying. The 4 hour time frame is stronger than the 1 hour time frame. 1 hour is stronger than 30, 15, 5, all that, right? So if you're looking at the daily, it's stronger than the 4. If you're looking at the 4, it's stronger than the 1, right? So with all this being said, the 1 hour was showing price could be bullish above this level. This is what you probably would have seen, something like this. Oh, made an indication, corrected, continuation back up here. Yeah, I see how you could see that. But if we're looking at overall what's going on, the market conditions, that's why I don't like telling people that, oh, just only trade the 1 hour. Flip your time frame, see what's going on. Won't mainly stay on the high time frames. I'll always influence you guys to stay on the 4 hour, 1 hour time frame. If you need entries, go to 30, 15. 15 is really good when it comes to trading with gold, for sure.
Back with day 13, I want to really risk like maybe 5 to 10%. Calculate how many trades will it take for me to lose to blow my account. I look for 1 to 3 risk to reward.
As you can see, price on BTC, we had that sell-off, of course, the drop, quote unquote. Everybody says, oh, because of Trump. Of course, Trump influenced it to push down more, and it gave it more volume, but overall the structure in the beginning was bearish in the first place. So then we came to the support level at 110. 110 ended up pushing up all the way to 115 before 115 got into a level of where sellers were at, right? So from here, price ended up selling down to 110 again, failed to break, tried to push up, failed to go any higher than 113. So now we have a lower high in the market. So because of this lower high, now price is pushing down, looking to retest or try to re-break out of 110. If we get a break below 110, I have an alert at 109. Anything under 109, BTC is obviously bearish, but the reason why I'm saying that is because I'm looking for Solana to continue to sell. I'm looking for Solana to continue to sell under 189. Once it goes under 189, it will start heading to 173, and then from 173, we'll be looking for 155. Overall, as you can see on Solana, we can have uptrend, so we have a higher high, higher low, higher high, higher low, higher high, higher low. Price didn't make a higher high, but it did make a higher low, which then ended up still being bullish, which is cool. Price higher high, boom, and then we have a break of structure here. So we have a break. Price tries to pull back up to redeem itself. So this was when that drop happened, or this is before the drop. Price ended up redeeming itself, making a lower high, and then ended up making a lower low. Now we have another lower high, looking for that lower low. So overall, all in all, we're looking for Solana to go bearish under 191. Once it goes bearish under 191, we just sell price. So yeah, I'm making this video before anything happens. Look at price. Literally look at price. Look at the timestamp. Look at the timestamp.
Okay, so as you can see, this level of support had buyers pushing price up from this level. So anything under this level would have been indicating that price is selling, right? So we got that sell-off last week, which ended up coming down to 173. Price ended up correcting in the market. I went down to the 4 hour time frame. When I go to the 4 hour time frame, you can see that the market stops at 210. Once it stops at 210, you can start to see more lower highs are coming into the market. And then anything under that level, which is 192, we're selling price all the way back down to 173 and looking for 173 to break and go down to 150. So once again, 192 is a level where buyers had control above. So the moment that price came back under 192, it had selling momentum to 173, which it did once again, which is what I sold.
we are looking at BTC and Solana. So as you've seen in day 12, Solana was like right around this level, if I'm not mistaken, somewhere around this level. And I was telling you guys how we was looking for price to be bearish under 190. It came under 190, went to 173. So like I explain all the time, levels or swing highs and swing lows, think of it in a seller's and buyer's mindset all the time. I don't care what you think it could be, just think of it as in a buyer's and seller's mindset. So the last video I showed you, this is a level of where buyers were super strong at. The reason why we know that price is super strong at this level is because it was going down, it was selling to a point until it completely shifted. So we can visually see this, right? We can visually see the dramatic change that price has made. So when we look at things over here, we can see that price drastically changed at this point and ended up selling down, right? And that goes for anything. So here, dramatic change. Here, stops here, kind of sits here. That's cool. That means something's here, right? Something's here. Price then has a dramatic change from here to here. And then we just have dramatic changes. They're small, but they are very important, right? Even here, price gets up to a point and it stops here. I wonder why it stops here. Because there are sellers at this level. That is very important, right? So really, when it comes down to swing highs and swing lows, it's more of a visual cue, not like, oh, price needs to have one green bar and one red bar for it to count as a swing. It doesn't work like that. Swing high just means that price comes up to a certain high point, and then it goes the completely opposite direction because of a reaction. So when it comes to this, I just overall want you guys to know anything under here. So if we have buyers here, if price is broken under this level before, this right here, this movement that price has made, so from here to here, this movement right here, price is going to repeat this if price does it again. Right? It's going to repeat this movement once again. So when it breaks again under this level, it's going to repeat this movement because essentially what is going on is because we have buyers here, right? We have buyers here. The moment price breaks below buyers, they become sellers. They switch up, right? So sellers. So the moment price switches up, anything under here is sellers. But what essentially is going on is these sellers are trying to find buyers. So it's going to continue to sell until it runs into buyers, right? So then when price runs into buyers, they exchange. So everything is now equal out, right? So now sellers run out, because that means there's enough buyers here to get all the sellers out or to equal up with the sellers. But then buyers become way stronger because they've been sitting down here. Buyers have been sitting down here, but we've just now discovered that, right? This move has discovered that this is a zone of where buyers are at, right? So think of it like this. Right now, anything down here is an imaginary zone for us. Let's think about it that way. I know some people are going to be like, oh, bro, you can just use an indicator to see the levels. I don't want to do that. I want to let price show me that is the level that it's going to do. When we're not predicting what price number or what price level price is going to have buyers at. We're letting price show us with reactions and price action and market structure. We're letting that show us where it's at, right? So with this being said, there's imaginary levels down here that we don't know about, right? So when it comes to that, we let price make that decision. So when price is selling, so here, we'll put this back up, selling, they equal out here. Well, sellers gone. Now we just have buyers. Buyers then, since they've been sitting here for so long, they have a substantial amount of buyers. So then you'll start to see a reaction. You'll start to see that reaction because buyers have been sitting here waiting for their moment to be seen. And once they're seen, they become popping. So they become popular, or they become a lot because they've been sitting down here for so long. And now the spotlight is on them. So now they're going to use that spotlight to try to take advantage of as much of the market as they can. So then what happens is you start to see that the market starts to have a reaction and start to push up. There will then be a point where price or sellers will no longer tolerate this because once again, this shows us sellers are in this market, in this trend, right? This is letting us know that the market is in this trend. Then we have this correction, which is basically the buyers trying to fight back as much as possible. This is why break and retest is not the best way to look at this either, because there will be some times where price breaks, comes back, and you might think it's a retest, and it just keeps coming back, keeps coming back, keeps coming back. Think of this as just a regular pullback. How we know when the pullback is over? Quite simple. So whenever you're looking for this correction, you'll start to see the market structure change. So if you're in sales, or if you see a sell indication, so this is where I'm dragging my finger across, this is the initial move that caused an indication. An indication is at the end right here. So this is where the indication is. This is the breakout. This is where the indication is. The indication is telling us from this breakout, price is coming to this point, indicating us, right? This is indicating us that price is coming here. Then we have the correction. The correction is normally after the indication, and this is just basically the opposite trend or the opposite side fighting back whatever the indication was. So if the indication is bearish, the correction is going to be bullish. So the best way to get into the continuation is to know when price is going back bearish. How do we know that? Well, this initial indication is already signs that price is bearish. It is strongly bearish. So anything under this black line is going to be our best probability that price is going to do the same thing. Because remember, buyers are sitting here, but once price is under here, it is bearish. So if we're on a correction and we're looking for price to be bearish, it would just make sense to sell back under here because we know price is bearish. Once again, let me repeat. If buyers are here pushing price up, if we break here the first time, this is showing us price is bearish to this level. So price is bearish from 190 to 173, right? Because of that, we have a correction. So if you are confused on when the correction is over, sell back under the level that showed you price was bearish in the first place. So sell back under 190 because then we know buyers are no longer here. If a level shows us that price from this point to this point is going to be bearish, that's all we have to do is wait for price to come back under that level and sell it again. Now, there's a little bit more of an advanced tip to help you out. Since you're looking for price to be bearish, there's always good signs to track your other swing highs and swing lows. So notice how price went on this correction and got to this point, this high, right? It got to this high, price tried to shoot down. Remember, there's buyers here. So this black line, remember, there's buyers here, right? Strong buyers. Buyers ended up pushing price all the way up to its highest point over here, right? So there's a lot of strong buyers here because they made this whole trend. Remember, look, this was a downtrend at first, but the buyers here at this level pushed price up so hard. So the fact that those buyers have gotten bypassed and broken, this shows that under this level, buyers have no strength, right? Because buyers didn't want to let price go any lower this time, but price let price go lower this time. So that means buyers are now weak in this market under this level, right? So with that being said, things to help you out. Price gets up to this level, high, rejects because there's buyers here. So then it tries again to break out of this high, fails to do so, right? I'm big on candle closes. For me, candle closes are very, very important because this is basically saying like, hey, this is a closed deal, right? So with me, these will go here. We can now see that price has a high, a low, a lower high, because this high is lower than the previous one, right? Boom. So now we have this and this. Then you see price break out of that level where you see there are buyers here. So this level here have buyers here. Then you see price break under that level. This is signs that price is going bearish. So then you sell price from here to down here. Your stop loss will always go above the reaction. So wherever that lower high is and price pushed up again, made another lower high, rejecting the upside, and then pushed down. So your stop loss will always go above the lower high. So if you're gonna sell, your stop loss goes above the lower highs. If you're gonna buy, price will always, you always put your stop loss under the higher low. So your stop loss will be here, your entry will be here. Right? So let's turn this green for you. Green, red. And that's how it's supposed to go.